independence. And what happens in markets? The Nikkei gets crushed, drops 20%. The politicians, predictably in Japan, freak out and they demand a return to zero. And 7 months later, Hayami retreats. He completely capitulates and moves the rate back to zero, and probably not surprisingly, soon thereafter, he's out of a job, right? So that we can think about the journey starting there. Let's fast forward 18 years, December 2018. Let's talk about our own country and what I think is the greatest reversal of monetary policy in our country's history. And I say that when I measure it based on the swiftness of the reversal and the impact of the reversal. So we're December 2018, Fed meeting day. The markets are down 8% for the month, so nerves are frayed. And Powell comes out of the meeting and he says, the balance sheet runoff, so coming out of QE, it's on automatic pilot. And with those two words, the market just loses its mind. It just dropped 5%. Trump says he's going to fire him. And things kind of go ballistic at that point. And I don't know if you know this, but Fed policy is that the day after a meeting, nobody in the Fed's allowed to talk publicly, but the day after, they are. And at the very first opportunity that Powell has to walk back his remarks, he saves face and do it himself, but he trots out Williams, who's the Fed president of New York, and Williams says, plans are not promises. We will reassess the data. The market knows exactly what that means, and it rockets up 15% in the next month. So like Hayami, complete capitulation. Hayami took 7 months, Powell took 2 days, right? Let's do one more. Let's fast forward to last March. The ECB, Christine Lagarde is in charge. Let's talk about March 12th to be exact. And she is president when spreads on Italian bonds, so what they are essentially over German bonds, they're blown out. And she says her version of risk must be priced. She says her version of automatic pilot. Remember what she said? She said, and I quote, "We are not here to close spreads." Are you sure, Christine? The markets go ballistic. During the press conference, spreads keep widening and widening out. She actually doubles down. She says it's not the function or the mission of the ECB to close spreads. She kind of thunders that. Spreads blow out even more. And do you remember what happened? Complete capitulation, except it didn't take Lagarde the 7 months it took Hayami or the 2 days it took Powell. 2 hours. It took her 2 hours. In the press conference, 2 hours after the speech, she completely walks back her comments with the quote, "I am fully committed to avoid any fragmentation. All is okay." Turns out she was there to close spreads after all. And in fact, her capitulation was so complete that the ECB took the unprecedented step of revising the speech with the conference afterwards. They've never taken the remarks of a press conference and appended them No level of pre-crisis irresponsibility, no level of overborrowing, irresponsible overborrowing, no level must be allowed to have consequences. The new Fed mandate is not price stability, it's not full employment. The new Fed mandate, again, through his actions, not his words, is let's decouple risk-taking from the consequences of risk-taking. The new Fed mandate is let's finally, once and for all, institutionalize moral hazard. So to foam the runway for this new mandate, what does he do? Jerome goes out and he starts buying securities at a scale the world has never seen or imagined was possible. He starts buying about a day's worth of US GDP, a day's worth. So I want to put that in human terms. All the work, all 350 million of us do. We wake up in the morning, we get our kids to school, we go to work, all of the work of all of us. You know, I picture Jerome kind of getting to his desk, gets the keyboard out and just like Control P click. All Americans, collective daily labor he just prints. Now, as I said, I don't question central bankers are well-intentioned. I strongly believe they are. But humans are not supposed to have that kind of power over other humans. You know, in the same way that a stock certificate is titled to company capital, money is titled to human time, Michael. I mean, people sacrifice their time for money, which enables us to trade our time for the time sacrifices of others. That's how it's supposed to work. So a tool that can command human time, the central bank keyboard, Control P, that keyboard steals time. And it steals time from some, particularly and most powerfully the non-asset owners, the most vulnerable. And it redistributes that time to others, most notably the existing asset owners. It adds rocket fuel to wealth inequality, and it leaves the fidelity of the signal content of prices just in tatters.
I think March 2020, that was the wake-up call for me. That you're a very sophisticated macro economist. I was oblivious, but that was like the massive jolt of some kind of macro shock that caused me to stop and decide that maybe I needed to take an interest in all of this. And what you've described is pretty sobering. I didn't really know the history like you do, but it's clear now the challenges that central bankers face, and it's pretty clear that we are over-levered as an economy. So I guess the question is, what's Bitcoin got to do with any of this? And what's Bitcoin got to do with corporations?
I mean, a lot. I mean, in my view, kind of everything. I can start with the conclusion. I'll work backwards.
Okay, I like that. Give me the answer.
Yeah, I'll give you the answer. The answer is Bitcoin is not volatile. That's the answer. And let me explain, okay? Learning Bitcoin is like, at least to me, it's like, for me, it was like learning a foreign language. You know, you live in Spain for a year or you live in France for a year, and at some point you get good enough. It takes some time, but with immersion, you think in Spanish, right? You think in French. Something clicks for you. You make that switch. You're no longer thinking, like, how do I say, where's the barber in Spanish, and doing that English to Spanish translation in your mind. You just think the question in Spanish. I now think in Bitcoin. Okay, it's taken me 8 years of morning study. You are much faster than me. You know, I'm a slow learner, but I get there. It's taken me 8 years of morning study and a lifetime of lessons studying the markets. But I now think in Bitcoin, and it's very freeing. And through that lens of thinking in Bitcoin, Bitcoin is not volatile. Fiat is volatile. The price of college is volatile in fiat. It keeps getting cheaper in Bitcoin. The price of prime real estate is very volatile in fiat. Keeps getting cheaper in Bitcoin. The price of all of my long-dated denominated liabilities, like a mortgage or retirement, or we do a lot of work with insurance companies, they're long-dated fiat-based liabilities, a death benefit for life insurance contracts or annuity payments. Those are extraordinarily volatile. in fiat, and they each keep getting cheaper in Bitcoin. And so to understand really what's going on and why this is happening, I think we need to ask ourselves two things. One, like what is money? Like what is it? And why is Bitcoin an excellent money, or even is it an excellent money? So what's money? Money is technology. It is, and it always has been technology, whether it's seashells or salt or cattle. It's always been technology. It's technology for making our wealth today available for consumption tomorrow. And virtually all of us, Americans, we just take for granted that there's a sharp line of distinction between what's a money and what's not. But that's false. There's not a line of distinction. In fact, throughout history, various monies, plural, have always coexisted along a continuum of soundness, meaning good money to kind of bad money. And they've always been subject to competitive network effects, like any competition. In fact, English language and language for humans in general, that was the first network, and money was the second. It also means that given enough time, and at any given time, including right now, no money is absolutely the best money on all dimensions. There are always trade-offs. Some are better, some are worse, some are better at this, some are better at other things. It also means that all money is temporal. No money has ever been or ever will be forever, including Bitcoin. Bitcoin will not last forever. It may last 100 years or 250 years. I mean, maybe forever for practical terms for everybody at this conference, including you and I. But it will not last forever because money is just a good, like any other good. What makes money as a good unique among all goods is that we value it not for its own sake, but for its prospective exchange utility, which means we hope the vessel, whatever we choose to store our money in, we hope that vessel keeps its value long enough so we can trade it in the future for stuff we actually want, right? Nobody actually wants green little pieces of paper. Nobody actually wants Bitcoin. What makes money as a good unique either? What we want those things to do is to hopefully allow us to trade them for things in the future we actually want, a vacation, a college education, property, whatever, right? So it's not that we want the money. We don't want the money. We want what the money can do for us in the future, what we can trade it for.
So then why is Bitcoin excellent money?
Well, I think that's for everybody to make up their own mind. I'll tell you how I think about it, though. There's really two primary dimensions that I think money should be evaluated on: salability across time and salability across space. So salability across time just means, will a money keep its value through time, or will it depreciate? The oldest fiat money that's in existence today is the British pound. And 371 years ago, when kind of the modern British pound started, it was equal to 1 pound of silver. 1 British pound bought you 1 pound of silver. Today, do you know what 1 pound of silver buys you in terms of British pounds?
I'm guessing that it buys you more than 1 British.
More than 1? A little bit, 174. So you used to buy 1 for 1, now a pound of silver buys you 174 British pounds. And the key here is to understand what changed and what did not change, okay? The silver itself did not change. 371 years ago, it weighed a pound. Today, it weighs a pound. 371 years ago, the silver had certain chemical properties. It's got the same chemical properties today. The silver did not change. The fiat changed. It depreciated more than 99%. So silver crushed fiat.
I hate the 99% number. I just hate that one.
Yeah, I just didn't want to take it out to that many decimals, but it's 99.763812. I don't know. It's a lot. It's basically worthless, right, relative to silver. But people talk about gold. What about silver versus gold? And the reality is gold has been far better and far more reliable. It's a much better store of value than silver because it's scarcer and it's got a much lower supply growth. Gold grows at about 2% a year. Silver grows about 20-30% a year. So gold is a much better money than silver, but let's compare it to Bitcoin. I mean, gold still does grow. You print through mining, you print gold at about 2% a year, and Bitcoin's on an asymptotic journey to 0%. inflation per year. So 2% a year, roughly times 50 years, and gold essentially depreciates completely versus Bitcoin. So Bitcoin will be worth far more than gold in the future once it clicks for people that gold is printed at a much higher rate, and that compounds, much higher, 1 or 2% a year, but that compounds over 10, 20, 30, 40, 50 years. But there's another property of gold that makes it weak relative to Bitcoin. And in fact, this is a property of Bitcoin that makes Bitcoin truly unique among any money in history, which is that Bitcoin is the first store of value ever in which its supply is entirely unaffected by its demand. You know, if we take the example of gold to prove this point, if gold went to, I don't know, $100,000 an ounce, so up 50x overnight, you and I know what's going to happen tomorrow morning. The miners are going to get to work very early. Right?
I'd be mining it.
You and I would drop the phone and start mining, right? We're going to start mining. We're going to look around our house for gold. We're going to melt it down. We're going to drive up the supply. We can't skyrocket the supply, but we're going to drive up the supply. We're going to drive down the price of gold. If during the course of this conversation, people really feel like bullish on Bitcoin and Bitcoin goes to 1 million, I'm saying that with a smile, what's going to happen to the supply of Bitcoin? Nothing. That's incredible. Bitcoin is the first store of value in human history where its supply is never, can never, will never be affected by any amount of its increased demand. So the conclusion is that Bitcoin is better at being gold than gold because it's more sellable across time. Now, the other characteristic about money that's really important is sellability across space. Like, can you move the money around the world efficiently? And this is another place where gold has a really acute flaw. It's just hard to transport. I mean, forget paper gold, send you back in sort of fiat land and all the problems of fiat. Gold is just hard to transport. And this is where fiat, for all its flaws, and fiat's DOA, but for all its flaws, fiat really shines here. You can move it around the world. And in sort of an internet world where network power is everything, this ability to sell across space is critical. However, I want to clear up a pretty common misperception, which is that Bitcoin is slower than fiat. The reality is the opposite. Bitcoin moves much faster across space than fiat. The key, though, is to compare apples to apples. Final settlement. And in final settlement, there's no comparison. Bitcoin increases our capacity for final, for example, international settlement by 500,000 transactions a day and completes the settlement with finality in about an hour. You know, in international settlement, you're talking 2, 3, 4, 5 days, 7 days. It can be a month, depends on the two countries. You may not get there. And even within a country like ours, Michael, don't confuse the speed of your Visa payment with its final settlement, because it's not finally settling. When you go to Starbucks to buy coffee with your Visa card, no final settlement occurs. What actually happens is your bank and Starbucks bank, they have some credit risk to each other for 2 or 3 days. Usually it's fine, but sometimes with disastrous results. And then there's final settlements. Bitcoin settles every hour, and it's a bearer instrument. It's the first ever electronic bearer instrument. So credit risk is not a concept. We said earlier that Bitcoin is better at being gold than gold. What we're saying now is Bitcoin is better at being fiat than fiat. It's more sellable across space. And because it's not debt like fiat, it has no credit risk. So the conclusion is that Bitcoin is the best money we have. Maybe it's the best money we've ever had. And that's why I've learned the language. That's why I now think in it.
Okay, I get it. It's pretty clear when you say it that way. Bitcoin's just better money, but it's not only money. And I obviously agree with you. However, I have a related question. Even if we agree that Bitcoin is better money, it comes at a cost. Bitcoin's use of energy. How do you think about that?
I mean, I think about it a lot. And I think that, you know, if people take nothing away from our conversation, I hope they take this part away about how I think about Bitcoin's use of energy. Let's start with some facts, okay? Bitcoin consumes a ton of energy. The amount of energy that Bitcoin consumes, you can think about it as the sum of all the mining equipment in the world. And there's no central registry for mining equipment, so we don't really know exactly, but I think an excellent estimate is about 10 million humans worth of energy. So it's enormous. And in a warming world, how can this be good? Well, let's set some context. Like, what is the problem of energy? What are we solving? It's never been its scarcity. We can produce tons and tons of energy. It's always been our ability to channel the energy geographically. That means to move it where it's needed most. And before Bitcoin, that was always where humans lived. We need to move the energy to where humans live. But Bitcoin's mining energy, it's just solving a different problem. It's solving a math problem, not a transportation problem. And because of satellites and wireless internet connections, a math problem can be solved anywhere. So Bitcoin mining can be located anywhere. And the long-term implications of this, I think, are world-changing. So for example, Bitcoin can make monetizable, isolated energy sources all over the world. I mean, think about waterfalls or running rivers. We can create dams in places that are now entirely untapped because they would be cost prohibitive to move that energy to the electric grid near where residential or commercial uses would be possible. It's just cost prohibitive. So here's the key insight. As Bitcoin's price rises, it's high enough now, but as it continues to rise, Bitcoin mining will be the most profitable use of energy in human history that does not need to be located near human settlement to operate. That's a big deal. Bitcoin is going to fundamentally change the economics of energy. And that's because with Bitcoin mining, we've got a highly profitable use of energy that's location independent. We've never had a highly profitable use of energy that was location independent. Now we do. And since fossil fuels are already too expensive for Bitcoin mining, I think confidently the only long-term profitable Bitcoin mining will be powered by clean energy. So imagine a future, just imagine, where Bitcoin mining firms, unsubsidized, and I think that's key, are in extraordinarily isolated locations. I don't know, let's visualize a waterfall, powerful waterfall in a population-free part of an African country that's destitute, people living in abject poverty, and we can easily connect that waterfall to the Bitcoin network. We can build the energy infrastructure to monetize the local clean energy source for Bitcoin mining. But once we've got the infrastructure, let's extend it. Let's build roads. Let's build houses. Let's build schools. Let's build human settlement. Let's move humans there. And I think the net result will be more and more of humanity clustering around cheap is key, clean is key too, energy sources. Historically, our challenge with energy has been to move the power to the people. Bitcoin will allow us to move the people to the power. Now, you think about the world's major population centers. I'm in New York, you're in Miami, think about Tokyo or Paris or London. They developed where they are geographically because of natural seaports or trade routes or waterways. The placement of those cities had nothing to do with energy because they were all pre-energy, right? They were all pre-fossil fuels. With more and more of the world's population now able in the future with Bitcoin to congregate around abundant energy, and this is the key, with extraordinarily low marginal costs of production, that's the part that matters. Because cheap energy in that form equals human flourishing. That's an equation. Cheap energy equals human flourishing. And we can sign all the climate accords we want. We can add our name to anything. We can virtue signal whatever we want. Sign them all, right? They're all irrelevant. They've been irrelevant. They will be irrelevant. What's relevant is this. Because when you have people with a profit motive, and for the first time ever, we have a huge pull towards clean energy with a profit motive, that's when things change. So from my perspective, beyond the revolution in monetary policy that Bitcoin already represents, Bitcoin also represents the biggest catalyst the world has ever known for the development of abundant, clean, cheap energy. And therefore, one of the biggest catalysts the world has ever known for human flourishing. It's going to take a decade or two, but that's one of the things that Bitcoin can do.
I never really thought about it that way before. It's really pretty amazing. I mean, manufacturing money from clean energy sounds like a better idea than manufacturing aluminum from clean energy.
A little bit.
And you got to imagine there's a lot of countries in the world that have shut-in, stranded energy, and they have, and we know you can't move electricity more than 500 miles. So if you could actually literally make money off of stranded energy, you can tap into your natural resources in order to move into the 21st century. I think it's fascinating. Yeah. May take a decade or two to realize the vision, but given the way the economics of mining works, especially as Bitcoin's price rises, I think the energy vision makes perfect sense. It's inevitable. Okay, so big idea, Ross. Okay, going back to Bitcoin itself and your firm, Stone Ridge. What is Stone Ridge doing with Bitcoin? And let's break it into two questions. What are you doing as a steward of your own firm's resources? And what are you doing to help others see what you see?
Well, our own resources, what are we doing? I mean, I don't know if you can read the books in the back. There's a lot of Taleb books. We like Taleb. So I'm going to rephrase your question a little bit, which is, Ross, don't tell me what to think. Show me what's in your portfolio. That's a Taleb phrase. Our reserves are now in Bitcoin. Now, it's been true since 2017. And other than what we keep, for convenience, for salaries and rent and things, cash we need, like fiat, our liquid reserves are in Bitcoin. So how did we get there? I think great questions are underestimated. And I think we got there through a great question that our team asked, which is, what do we have to believe to be true to move to the Bitcoin standard? What do we have to believe to be true to move our reserves from fiat into Bitcoin? And our answer was that if we allow ourselves to focus only on point-to-point risk, meaning point-to-point in time from today until our long-dated fiat liabilities are due. Remember, we're a corporation, so theoretically infinitely lived. Of course, we're not actually infinitely lived, but yes, we have salaries and rent next week, but we have salaries and rent in 10 years and 20 years and 30 years too, so we can think about those liabilities. If we just think about point-to-point, the only thing we really have to believe is that over the next 10 or 20 years, that the dollar will depreciate relative to Bitcoin. I believe that. I have no idea what the dollar is going to do tomorrow, next week, next month, next year, but I have a high degree of confidence, and I voted with my dollars, not certainty, but a high degree of confidence that the dollar will depreciate versus Bitcoin over the very long term, as it has 80% depreciated in the last 2 years, as it has 30% depreciated so far this year. So this insight allows us to ignore US dollar volatility along the way, focus on point-to-point, focus on end-state economics. Now, like anything in life, a point-to-point perspective doesn't make it a risk-free perspective, but it is our perspective. And the net result has been, and I believe will be, enormous competitive business advantages, certainly relative to other firms in our sector and financial services. I mean, for us, everything's getting cheaper, right? So paying rent, paying salaries, M&A, recruiting, it's all cheaper. And the stock market's making new highs every day. For us, everything's on sale, right? So abstracting from Stone Ridge, though, if you take company A and company B in the same industry, one adopts the Bitcoin standard and one does not, just think about the macro environment. As the money printer goes burr, if it continues to, I think it will, as credit creation just continues to explode, as real rates on riskier and riskier assets continue to go negative, when we cross the Rubicon, when real rates on corporates went negative recently, consider the implications for the dollar in 1 year, and 2 years, and 10 years. I don't know. Lower? A lot lower? Certainly versus Bitcoin. That's my view. Versus the yen, versus euro, I don't know, but certainly versus Bitcoin. Remember at the very beginning, we talked about every CEO's most important job, capital allocation. The decision of whether and how to adopt the Bitcoin standard. I believe that will be the single most important decision every CEO makes in the next 10 years. The most important decision, whether they realize it today or not. And I acknowledge well under 1% would acknowledge that's going to be the most important decision they make in the next 10 years, but it will be. And whether they actively make it or not, they make it. They make it with high consequence.
Okay. So the second part of my question is, what are you doing to help others see what you see?
Well, for a while we were trying and nothing was actually happening. I recently learned how bamboo grows. It's pretty, to me, it's pretty fascinating. It spends its first 5 years building an extensive root system underground and basically doing nothing visible. And then it explodes 90 feet in the air in 6 weeks. That's bamboo. It's not a terrible analogy to NYDIG, Stoneridge's Bitcoin subsidiary. You know, we started in 2017. We put a great team together. We had a bunch of capital. We worked and worked and worked. You know, we laid our root system. We operated we operated in stealth. It's true that we operated in stealth, but it's almost as if it didn't matter that we operated in stealth because no institutions really cared, and it wasn't for lack of trying. We could be knocking on a lot of doors. We were just too early. We were just too early. But, you know, we kept at our craft. We built our root system. We thickened and strengthened the roots. And we worked quietly, you know, out of view, which is our style. The firm, you know, has had a no press policy since its inception in 2012. But if you fast forward to today, NYDIG is a full service, vertically integrated Bitcoin only financial services firm. The first billion during that dark, challenging 5 years, it took 1,200 days to raise that first billion. Which
first billion's always the hardest.
First billion's always the hardest, 1,200 days. The last billion took 6.
6 what?
A year ago, we had 25 institutional clients. Today, we have 280 institutional clients. We've got a pipeline in the onboarding process of 96. We can put 75 institutions through the pipe a month. That's our current capacity. We've got over $6 billion in Bitcoin now between what's in the door and what's committed from institutions. And we are vanguardizing this asset class. Best product, best price. And as we scale, we're driving prices down, down, down. Our pricing today is 70% lower than it was a year ago. And by the end of the year, Michael, I am confident we'll have over $25 billion of Bitcoin. I've just got this order book. I'm not guessing. I see what's happening.
Okay, $25 billion. Yeah, that's astonishing growth, and it matches what I suspected, but I didn't know is going on with institutions and Bitcoin. Given NYDIG's role in the Bitcoin ecosystem, you have tremendous visibility into what all sorts of institutions are doing and how they're adopting Bitcoin. So what can you tell us?
Well, I mean, the one-liner is all kinds of institutions are adopting Bitcoin. Public companies, private companies, hedge funds, private equity funds, credit funds. I mean, even investors who, if you asked me a year ago, would they come in? I'd say absolutely not. The most conservative, but also the most sophisticated and most careful investors in the world, AAA and AA life insurance companies, AA P&C insurance companies today have more than $500 million of Bitcoin exposure through NYDIG. And I know for sure, because I'm not guessing, they're just getting started. And these institutions want to do more than just own Bitcoin. That's table stakes. Within a year, America is going to be able to get a portion of their income annuities paid in Bitcoin. Americans will be able to get a portion of their salaries paid in Bitcoin. You want that paltry interest on your CD paid in Bitcoin, you'll be able to get that too. There's going to be an explosion in Bitcoin-driven financial innovation. Another interesting phenomenon we're seeing in our book is exactly 0 clients have walked back their allocation. And that may not be true for other firms, but that's true for us. So once people get off 0, they either stand pat or they increase. Now, I don't want to overstate this. It's been a year, but that's what we're seeing so far. And another phenomenon we're seeing is among family offices. So a year ago, we had 0 family offices. Today, of our 6 billion, 2 billion is from family offices. And the average account size of a high net worth individual is $7 million. So yeah, we serve retail, but the average account size is $7 million.
So the breadth of adoption across institutions and the increasing adoption within a given institution. Shocking, not surprising.
Yeah,
It does seem to be, it's a one-way trade. That's the way I see it.
no question.
You're moving in that direction. So, I don't think of it as a crystal ball, but what does the future of Bitcoin hold? And do you think it's too late to opt in? And I'm interested in, I know I have my opinions, but what are your drivers for the price over the next few years?
Well, I definitely don't have a crystal ball, but I think, at least from a framing perspective, I'll tell you how I think about it. I think about the first chapter of Bitcoin as kind of the Genesis block until, let's call it now. And that's been all about Bitcoin, the asset, which is really the theme of this conference. And what's driving right now accelerating institutional adoption is the view of Bitcoin being de-risked, right? And I think that's why you're just going to see a wall of money. I know it. I have an order book, a wall of money coming into the asset class. So let me put you to sort of frame this out in the mind of an institutional investor, me. Okay, I'll put you in my mind. My partners and I bought more Bitcoin in 2020, last year, than in 2013 through 2019 combined. Okay, and as our fiat businesses continue to inflate and accelerate, which they are, I expect we'll buy more Bitcoin in the next 2 years and than we did in the previous 8. So what's going on? I mean, we're conservative, institutional, professional risk managers. It's what we do for a living, and it's why investors, including the most conservative investors in the world, have entrusted us with $20 billion in our alternative businesses, our non-Bitcoin businesses. And to us, conservative us, Bitcoin is de-risked. Why? Well, when I look at Bitcoin, I see it above $500 billion of market cap. I see millions of people using it every day with a clear line of sight to tens of millions of people using it every day, and then billions. I see 12 years of uninterrupted, safe operation of the network. When I look at all that, the left tail of the zero outcome is gone. And that is the key observation. So when I talked to institutional investors a few years ago, I would get the question, what's the chance of Bitcoin going to zero? And a few years ago, that was an interesting conversation. Last week, a client asked me, what's the chances of Bitcoin going to zero? I said, what's the chances of Christianity going to zero? Like, it's just not. Like, it's just left. It's left the station. And so remember, at Stoneridge, we are risk managers. We do it professionally. And what you're talking about here with Bitcoin is an extraordinarily asymmetric upside asset. We can debate whether it's good or bad, but I think we can't debate the asymmetric upside to it. It's perhaps the most asymmetric potential right tail asset in the world, in history. And you chop off the left tail, we all know what happens, right? To the mean, it just explodes. It explodes. You chop off the left tail, the mean explodes. And you combine that with the macro environment, the money printing presses running at full tilt. I mean, the blue wave in the US, complete political dysfunction around the world. For us, at least at Stoneridge, fiat reserves are like a hot potato in our hand. We make them in this business. We can't get them out of our hands fast enough and put them into Bitcoin. We can convert them as quickly as possible. So yeah, we're risk managers at Stoneridge, but we're also capital allocators. You can't eat risk management. You can eat making money in the markets. And we believe in the power of Bitcoin, but if we didn't think we'd make money, we wouldn't invest a penny.
So you're calling chapter 1 of Bitcoin 2009 through today, Bitcoin the asset. And I guess that really is a process of going from 0 to 1. Bitcoin didn't exist, now it does. What's chapter 2? Well,
I think chapter 2 is going to be incredibly exciting. And chapter 2 builds on Bitcoin the asset, and it adds Bitcoin the network. In chapter 2, Bitcoin the network, it solely leverages Bitcoin's proprietariness as an open source monetary network. In chapter 1, we reached millions. In chapter 2, we're going to reach billions, and we're going to do it quickly. And chapter 2 starts right now. So I'll give you a flavor of chapter 2. Say I want to send $1,000, I'm sitting in New York right now, to a friend in Milan, Italy. Strike, Jack Mahler's firm, working with NYDIG, takes my dollars and delivers them to my Milan friend in euros instantly and for free. What? How did this happen? So let's go slow. First, Strike takes my dollars from my bank account, my $1,000, and they debit it. That's a millisecond. Second, Strike works with NYDIG and we do a trade. We convert the $1,000 into Bitcoin. It's another millisecond or two. Third, Strike works with Lightning Labs and it zips the Bitcoin across the Atlantic Ocean to Milan. We're still in single digit milliseconds, basically instantly. Over there's another FX trade. NYDIG converts that Bitcoin into euros. We're still in milliseconds. And finally, Strike credits my friend's bank account with final settlement in euros. Done. So what just happened? What just happened is $1,000 were moved from me in New York to my friend in Milan and converted into euros instantly and for free. How? Because for the first time in history, we have an electronic bearer asset. We've never had an electronic bearer asset. It's called Bitcoin. And an open source monetary network, which we've never had before. It's also called Bitcoin. That together can achieve cash finality anywhere in the world, anytime, 24/7, 365, with liquidity in any currency pair you care about. And notice something critical in the transaction I described, critical. The volatility of Bitcoin, the asset, was nowhere to be found, right? Why? Because we didn't use it. We didn't use Bitcoin for its properties as an asset. We used Bitcoin for its properties as an open source monetary network. Now, I gave you an example of two friends moving $1,000 from New York to Milan. That's cute. It's adorable. Imagine the entire global import-export industry with instant and free international settlement, right? Imagine the entire global remittance market with international and free global settlement. Imagine the entire global credit card industry with no merchant fees, right? I mean, use the open source networks of Bitcoin and the open source networks of Lightning. And Bitcoin, the network, will change the way we all interact and connect. This part, chapter 2 of Bitcoin, this part has nothing to do with monetary policy. This point has nothing to do with central bankers, with dollar depreciation, zero. However, there will be this virtuous, beautiful feedback loop between Bitcoin the asset and Bitcoin the network, and Bitcoin the asset and Bitcoin the network. And working together, the Bitcoin the asset specialists at NYDIG and the Bitcoin the network specialists at Strike and Lightning, they're going to get this chapter 2 flywheel in motion, and it is going to hum. It's going to hum. So just stay tuned for more.
Okay, that's all inspiring. I'm really excited. World changing. Bitcoin as the greatest force for good in the world kind of stuff. What do you think stops so many people from seeing it?
Well, I think that it is awesome. It is awe-inspiring. And I think we just live in such a cynical age with so many people devoid of feelings of awe. It's just kind of beaten out of us. I mean, I'm grateful for many things about Bitcoin. I think one of them is it's just wonderful that I need not be among the people who are devoid of feelings of awe. I think that relates to another question, which is why people underestimate Bitcoin so much. And what do they underestimate most about Bitcoin? And that one's easy, right? That's easy. The ferocity of the Bitcoin community for Bitcoin. That I can tell you that is underestimated. I don't speak for the community, I speak for myself. But I think there are two core views of the community. The first view, we'll call it the individualist view, is that money is not the root of all evil. Money is a root of all sovereignty. It's the authority to act in the world as we see fit, as long as we don't harm others. Money is a property right. And since we've traded our time for money, when money is printed, our time is stolen, and that is not okay. The second view, I would say, is the community view. Money is the greatest force for good in the world today. It's an arc. It's designed to help the most vulnerable, the most unprepared, escape the accelerating fiat flood. And it's raining outside pretty hard. So let's get as many of those living on society's fringes, not just in the US, but everywhere. Let's get them in the arc. Let's get them in the arc as soon as possible, and nothing is more important. What I would say, though, is that these two views of the Bitcoin community, they're not mutually exclusive. And in fact, every single Bitcoiner I know holds both of them in their minds. You know, one of the things that really got me going, and a lot of Bitcoiners going, was last March. when Kashkari, who's president of the Minneapolis Fed, he said, there's an infinite amount of cash in the Federal Reserve, an infinite amount of cash in the Federal Reserve. You could almost hear the other 11 Fed presidents saying, shh, Neil, you're not supposed to say that part out loud, right? Right? The American people are really smart, right? They may not have gone to the same schools as Neil or worked at the same firms as Neil, but they're smarter than Neil. And one thing they definitely can do, they can do division. If I got $50,000 of life savings, I don't really know what that $50,000 is out of, but I have a sense, right? And now the guy in charge of the money is telling me the denominator is infinity. I don't need to know calculus or theory of limits to know that my 50,000 divided by infinity, that means my 50,000 bucks is worthless. Why would I hold my life savings in something with infinite supply? I mean, I might as well go to the beach and exchange it for grains of sand. They're an infinite supply too. So I think what Kashkari is really telling us is that fiat should come with a warning label, like cigarettes comes with a warning label, but instead of the cigarette label saying, you know, these are bad for your health, the fiat warning label would say these are bad for your wealth, right? And the cigarette pack has this, you know, this skull and crossbones on the outside. I'd like to see the Treasury start printing the infinity sign on our cash. So if you got a $20 bill, under each the numbers in all the corners, it would just, you know, have a red warning label that says divide this number by infinity. Remember, as I said earlier, a central bank can control the supply of money. They can't make their people value it. So, you know, I think that Bitcoin is massively underestimated. I think that's understandable. I mean, I think you underestimated it. I underestimated it. Until we go deep down our own version of the rabbit hole, it's underestimated. I mean, the financial establishment underestimates. Again, I did until I didn't. You know, I give them all mulligans. They just haven't put the time into it. I mean, Jamie Dimon calls it a fraud, right? Yet it's much more real than fiat. Larry Fink calls Bitcoin an index of money laundering. I think it's more akin to an index of money printing. Warren Buffett calls Bitcoin rat poison. That one's shameful. That one is shameful because Bitcoin is giving life, not taking it. It's giving life right now to tens of thousands in El Salvador and Pakistan, Venezuela. It's giving life. It's not taking it. And soon to be millions, and with Strike and NYDIG and Lightning, soon to be billions. So fraud, money laundering, rat poison, Bitcoin, it's just intellectual laziness. I think people also underestimate just how unstoppable it is. Bitcoin is just unstoppable. I mean, it'll have fits and starts as it has, of course, that's for sure. But it is here to stay forever. And that's for a simple reason that it's open source. It's open source. I mean, China, last time I checked, pretty powerful place. They basically banned it. The price rallied in their face. India basically banned it. A lot of people lived there last time I checked, basically rallied in their face. Pakistan banned Bitcoin, banned mining. It all went underground. Usage exploded. Mining in Pakistan after the ban exploded. It was so profitable to mine in Pakistan that eventually the government themselves, the province, started a Bitcoin miner, and they changed the legality of it. So, you know, these are three of the four most populated countries in the world. Effectively kind of said Bitcoin's banned. We're making new highs kind of even as we speak. And I think about our own country. I really don't think a ban is in store because I don't think it's possible, but we can just go there for a second. Let's just say the US banned Bitcoin. It wouldn't stop it. It would accelerate it. Remember, we kind of tried this once in 1935. We did actually ban and confiscate gold. Remember what I said before? You actually could do that. You can't confiscate Bitcoin. You could. And in the ensuing period of time till today, the dollar's depreciated by 85% versus gold. So it didn't work. I imagine trying prohibition today, right? I mean, that's alcohol, and it would be unenforceable. Can you imagine trying to ban people from holding their own money? I mean, forget it. No way. And it won't happen anyway because it's private property. And we've got pretty good rules in our country about private property. And it might even be speech because it's code. So it might even be protected by the First Amendment. But regardless, Michael, none of this matters. None of this matters. Because with regards to confiscation, if you really boil all this down, what is it? It's just a password. It's just a password to a private key. And that password can easily be stored with phrase memorization in my head. So confiscation's off the table. Remember, gold has a vault. You can take the vault. Good luck confiscating my memory.
Yeah, and given all of this, it seems like individuals and corporations are being forced to take action.
Yeah, look, I think everybody now has a choice, which is a good thing. And it's a choice they make, you make, I make, and everybody gets to make on their own. You can stay on the fiat standard that's available, in which some people get to print new units of money in unlimited size, just not you. Or you can move to the Bitcoin standard, in which no one gets to do that, including you. We finally got a monetary system governed by rules, not rulers. And given that I've made my choice, you have to make yours, and everybody at this conference has to make theirs. I will tell you, I am working tirelessly towards a future with a globally adopted, inflation-proof common currency for the world, one that billions can opt into as their peaceful weapon of choice. You know, Satoshi solved the Byzantine generals' problem. Bitcoin solved the military generals' problem. And when you think about trends in anything, you're a tech guy, all you got to do is follow the brains. Even more than the money, the brains know first. Where are some of the smartest people in the world shifting their careers to focus? Where are some of the best developers in the world going? They're going to Bitcoin. And I'd never underestimate the power of a mass movement of developers. And don't underestimate the ferocity of the emerging decentralized class, us Bitcoiners. I mean, just like early encounters with the printing press and antibiotics and aqueducts and the internet itself, they were incalculably underestimated. People incalculably underestimate Bitcoin, totally understandably. But you, Michael, MicroStrategy, your colleagues, I think you're doing everybody an incredible service by having this conference, by having this talk and creating a platform for these ideas to be introduced. So look, you just heard from a guy with a background in financial services and a background in Bitcoin. I straddle both worlds. So I offered my perspective, but it's only my perspective, colored by my experience. You're a fellow founder, you're a fellow entrepreneur, you're a fellow CEO. You've got your perspective. You're a tech guy. You know, what do you think about this? And what do you think I've said and what I've missed?
Well, you know, Ross, I think there's clearly a macroeconomic wind that's blowing, and I don't think any corporation can afford to ignore it anymore. We've all got to act. You've acted. MicroStrategy's acted. The reason we're having this conference is to help everybody else figure out what they should do. And I want to thank you for sharing all this. This has just been mind-blowing. It's just awesome. I'm just so inspired. And I didn't realize there were so many institutions that were moving into this space as aggressively as they are. What a difference a year makes. Yeah. So I guess we'll wrap our session right now. And I want to thank everybody that's been with us for this session. And we'll pick up with our next session on corporate strategy and Bitcoin in 5 minutes. But Ross, thank you for everything.
Great to chat with you, Michael. Good to see you, as always. Take care.
Likewise.
Cheers. Bye-bye.
Hey everyone, and thank you for joining us. We are streaming the World Now
Hey everyone, thanks for being here. This is a stream of MicroStrategy's GigaChad Sailors conference on Bitcoin for corporations. And this is, I think, a very, important moment in Bitcoin's history. Obviously, last year in August, when Michael Saylor came out and announced that MicroStrategy was moving their entire corporate treasury over to Bitcoin for, I think it was $450 million. We had and I mean, I think it really kind of shocked the Bitcoin world, right? It was a lot of us didn't see it coming. We had the narratives of institutions coming in for quite a while. We saw the big investors coming in, Paul Tudor Jones, et cetera. But we had not really been talking about corporations using Bitcoin as a treasury reserve asset, at least not too much. And it seems obvious in retrospect, as Elon said. It seems it's inevitable in retrospect, talking about Bitcoin, but also applies here to specifically Bitcoin on a corporate, Bitcoin as a corporate reserve asset. So this is a big deal. And right now, well, just to bring everyone else up to speed to finish that narrative, or finish that story, MicroStrategy then took out a loan for $600 million, I think it was, at 0.75%, 75 basis points, which is essentially free money, and bought another $600 million worth of Bitcoin. They own over $1 billion worth of Bitcoin. Their stack has more than doubled in US dollar terms. So they have really strengthened their treasury position over the past 6 months as Bitcoin has gone up in USD price. And so today and tomorrow, MicroStrategy is hosting this conference, and there are quite a few other tracks, so to speak, in the conference that are more corporate, kind of normal corporate stuff. But one of the main tracks is on Bitcoin for corporations. And Michael Saylor seems to be spending most of his time on this track. He's going to be hosting the next session as well, which will start here in just a few minutes. And his commitment to Bitcoin is amazing. We just saw Ross Stevens, the CEO of Stoneridge, talk about their commitment to Bitcoin as well. And he was amazing. Ross really did an incredible job, has a deep understanding of Bitcoin, and is amazing to hear these CEOs talk about Bitcoin in this way. So there are thousands of CEOs and of corporations attending this conference. In fact, this morning, the servers could not keep up with the demand. I'm not sure exactly why, because everyone was registering so that they had a head count. But in any case, the servers went down. We were talking on Twitter about how that was bullish for Bitcoin. And yeah, it's really awesome to see. Thank you all for being here and watching this sort of seminal moment in Bitcoin history, as these moments just stack up. We are on the verge of an incredibly bullish year for Bitcoin. We're up over 37,000 again, creeping back up to that all-time high at 42,000. And it could just break away at any moment, of course. So we're keeping an eye on price. We're keeping an eye on Saylor and the conference. And really appreciate you all being in here. And the chat has been awesome. So let me pull up the chat here. Here we go. Put the chat up here on air. Let's hear what you guys think. Let me know what you thought of Ross Stevens and that session. And let's talk about Michael Saylor. Let me know if you have any questions for me. And this is fantastic. We're going to get the next session, which should be, let's see what it is. Okay, I was talking to the YouTube audience. We're also on YouTube, Twitch, Facebook, Twitter. So let's see, the next session is... so that was Bitcoin macro strategy with CEO of Stoneridge, Ross Stevens. Next is Bitcoin corporate strategy coming up here in just a couple of minutes. So I'm going to go ahead and pop into this room and see if they have started yet. Not quite yet.
So in terms of what's coming up, as Brady mentions, Bitcoin corporate strategy from their website, it says Bitcoin can be integrated into the
We're also streaming this live on Clubhouse right now. So we are helping to run a room called Cafe Bitcoin. So if you guys are on Clubhouse, you can log in there and join the Cafe Bitcoin Club. We're running rooms every day. We're doing some scheduled stuff like every Monday night, doing Bitcoin for beginners. So awesome conversation has been happening on Clubhouse. It's been great to see. And yeah, you can join us there. It's iOS only at the moment, but it's growing like wildfire. It's a really cool audio only social network. And it's a social network that has more genuine connection than any other social network I've seen before. So it's really interesting to interact. It's sort of like audio or like talk radio for the internet age. So yeah, if you're on Clubhouse, check us out. You can follow the club, join the club, become a member, and that'll be fantastic. So yeah, I think you might have heard Brecky talking in the background. That he was on Clubhouse talking. So yeah, so look, I'm super bullish about this. I think that we'll see corporations come out of this adopting a Bitcoin standard. I think Michael Saylor said it took a few months for them to really set up their corporate reserve strategy and actually purchase the Bitcoin and put it into cold storage. He revealed some details about how they did that already, but in this particular conference, they'll be open sourcing, so to speak, their entire strategy and process. And I think in a few months, maybe by the fourth quarter of this year, we're going to see, hundreds, if not thousands, of announcements of corporations putting at least some Bitcoin on their balance sheet. And of course, even if it's like 1%, 5%, 10% to start off, there's going to be sort of this race to 100%. And MicroStrategy really set that tone, said, hey, we're going straight to 100%. We're not going to mess around. Square came in and said they put in $50 million soon after that. So we have some precedent here, and it is going to be a race, right? So if we have like 1%, 5%, 10%, other companies are going to look at what other, the companies, their competitors are doing. All right, here we go. Michael Saylor's back.
This is Michael. I'm the CEO of MicroStrategy. In our next session, we're going to talk about corporate strategy with regard to Bitcoin. And I'm really excited about this session. There's a lot of topics I wanted to cover, and I think they dovetail really nicely with what Ross covered in our macroeconomic review. Let's start with the big picture. There's a macroeconomic wind blowing. We're in an inflationary monetary environment, and we can expect that to continue. I think a reasonable business planner would think out at least 4 years, but I think we can see out about 8 to 10 years we're going to be in an inflationary environment. Ross laid out many of the reasons why. It's challenging for any central bank anywhere in the world to control the supply of money, and we're going to have expansionary fiat environment for a while, and credit is flowing freely. The interest rates are at all-time low. There's no indication that interest rates are going up. So that creates an interesting dynamic. We have two interesting trends here. First of all, Bitcoin is digital gold. Second, Bitcoin is an emerging digital monetary network. Both of those are interesting and critical to corporate strategy. Let's talk about digital gold as harder money and market dynamics. Basic principle of market dynamics is capital is going to flow from weaker assets to stronger assets until every asset is equally attractive on a risk-adjusted basis. If I have one asset that's yielding 10% return and the other is yielding 5% return, and the risk premiums are exactly the same, then and the risk is exactly the same, then people are going to sell the one asset to buy the other asset. And of course, the prices will adjust until the actual yields are the same. This works with any asset, although it's kind of hard to calculate the risks with equities and real estate and derivatives and bonds. On the other hand, currencies are a more pure asset. So generally, weak currencies are going to have capital flow out of them into stronger currencies. Truly weak currencies may just continue to see capital outflow until the currency itself collapses. That's a dynamic that's driving this market. And the appeal of Bitcoin as digital gold is as a strong asset, and capital will flow to it. The second dynamic here is that we need to take into account. It's a technology dynamic, which is, digital gold is smarter, faster, stronger money. It's not just harder money. It's smarter, faster, stronger. It's monetary electricity, and it's monetary electricity flowing on a network. And Ross made this point. So you can build Bitcoin into any financial product, or you can build it into any technical product. And so that means that Bitcoin as digital gold is interesting as a hard money asset to any corporation handling money. But Bitcoin as a monetary network is interesting to any corporation that has financial products or technical products. And so I'll leave those as two high-level thoughts. Now moving on to corporate strategy. What's every CEO think? What is the elements of corporate strategy? Well, first point, I want to grow my revenues and I want to grow operating income derived from the generation of revenues minus cost, operating income. Every company knows they want to drive revenues north and drive operating income north. Second idea, I would like to grow my assets and I'd like to grow my investment income. If I have $1 billion and it's generating zero, I have no investment income, I have $1 billion in assets. If I can drive that to be $10 billion in assets with a 20% yield and have $2 billion a year of investment income, better. The same idea of revenue holds for assets. So growing revenues, growing assets, and growing operating income and growing investment income, these are all objectives of a corporate strategy. And if we put on our shareholder hat, I want to create shareholder value and I want to preserve shareholder value. And the creation and the preservation of shareholder value is somehow, in many ways, related to how I drive revenues, assets, and incomes after we take into account the leverage on the balance sheet. So the next thought that colors our considerations here is in a macroeconomic environment where the currency is weakening, the road to serfdom is working harder, ever harder, to earn a currency growing ever weaker, and then investing the proceeds of that work into assets that are growing ever riskier. Or even worse, to surrender your capital base completely. For example, you wouldn't really think twice about if you had savings in your family, you wouldn't give them all away before you had your first child. You would think, I need to have money so I can support my children. So a family would want to accumulate assets, not give them away. And on the other hand, we're in a macroeconomic environment where there's continual pressure on corporations to surrender their assets, either buy their stock back, which is a way of surrendering assets, or to issue dividends, which is another way of surrendering assets. So why do people buy their stock back and why do they issue dividends? Well, the view is their cash and their treasury is not beating the cost of capital. So if the cost of capital is 5% and you're getting 0% yield on your cash, you're under pressure to surrender your treasury assets. And of course, that's good for the shareholders, but it's awful for the company because the company is decapitalized. It's the same as giving away all your family's assets. It's good for whoever got the assets. It's bad for your family. What's really dysfunctional? Well, the idea that you would issue debt to pay a dividend. What if I borrow $1 billion, dividend out to the shareholders? Now the company owes $1 billion. The shareholders have the billion, and my customers and my employees just owe $1 billion. So issuing debt to pay dividends isn't really good corporate strategy. In fact, you see the last 20 years is littered with bankrupt companies that actually did LBOs. They leveraged buyouts, they issued debt, they paid huge dividends to their shareholders, and then the company itself is rendered insolvent by misfortune or difficulty in business. Issuing debt to fund operating losses, not much better. If the company is losing 100 million a year after year, and it just borrows $1 billion and keeps losing money, that's also a road to serfdom. Funding consistent business failure with debt is just putting off the inevitable. Issuing debt to buy your stock back, not really much better. If you issue $1 billion of debt, buy $1 billion in stock back, well, the shareholders have take off with the cash. They look to invest it, but your company has $1 billion in a liability. You've created a little bit of leverage, but you burden yourself with liabilities. Now, why do companies do these things? Well, because debt is cheap and because they're under massive pressure from outside groups to generate a positive return on their capital. And as the cost of capital keeps going up, they can't, or at least you can't with traditional treasury strategies. If you're investing in government bonds or T-bills and the cost of capital is 7%, well, you're not beating it. When the cost of capital goes to 15%, and that's about where we are right now, probably 15% or more, there isn't any conventional treasury strategy that's going to yield more than 15% risk-free interest. What happens next is there's this massive pressure to give the capital back to the shareholder because they realize that shareholder value is not going to be preserved in cash. Now, that's a way of capital preservation. If I take tens of billions of dollars and I dividend it back to shareholders, the capital is preserved because they're going to presumably invest in something that will be the cost of capital. But it's a method of corporate destruction. The companies, which create the jobs and they create the products and the services, they're being destroyed as the capital flees into some other place. So what causes this? It's macroeconomic pressure. If the environment was only growing the money supply at 2% a year or 1% a year, there wouldn't be so much pressure. When the macroeconomic wind is blowing at a 5% monetary expansion, which is what we've been in for the past decade, there's a lot more pressure. When the cost of capital goes to 15%, becomes extreme pressure. And now every company has to make one or two choices. You either have to decapitalize, which is kind of like self-destruct. You're going to, capital is lifeblood. You're going to self-destruct, or you have to recapitalize with an asset which is going to appreciate faster than the rate of monetary supply expansion. This is where Bitcoin comes in. Now, I think there's a useful metaphor that you can use to try to figure out what's a good corporate strategy with regard to Bitcoin. And I'll call it the parable of the Argentine rancher. Let's say you have a ranch in Argentina, and it's a profitable ranch in Argentina. And this is sometime in the distant past, 10 years ago, 20 years ago. And what if I told you macroeconomically that you can expect the Argentine peso to weaken versus the US dollar by about 25% a year? This is not such a far-fetched idea because the peso went from 1 peso to the dollar to 2 to the dollar to 4 to the dollar to 8 to the dollar to 10 to 20 to the dollar to 40 to the dollar to 60 to the dollar to 80 to the dollar to a black market rate in excess of 100 to the dollar. So the Argentine peso has collapsed against the US dollar. in that range. So let's say you're a really intelligent business person and you run that Argentine ranch. If you knew this was going to happen, if you knew the Argentine peso was going to weaken in purchasing power against a benchmark, and the benchmark we'll say is the US dollar, what's a rational corporate strategy? Okay, by the way, this is not that hard. First, you're going to take 100% of your Argentine pesos in your treasury, and you're going to convert them to US dollars. Because if you have $100 million in pesos, when it's 100 million pesos, if you look out, eventually you're going to have 100 million pesos worth $1 million, and you're going to lose 99% of your wealth. Okay, so you convert your 100 million pesos into $100 million. First step, simple step. Next, I'm generating 10 million pesos a year from the business and cash flows. What are you going to do? You're going to convert all 10 million pesos every year into dollars immediately. As soon as you generate peso and cash flow, it becomes a dollar. And if you do that over 10 years, you're going to have 100 million pesos become the discounted amount of dollars. It won't be $100 million because the discount rate is 25%, but you'll capture 25, 30 million US dollars worth of value. If you don't, your 100 million pesos over 10 years will be worth $1 million. Right? So you're capturing $24 million instead of $1 million by converting your cash flows. What would you do next? Well, if I know that I'm going to have 100 million pesos over the next decade that have a net present value of $25 million if I convert them immediately, what if I go to a bank in Argentina and I finance the cash flows? I go and I borrow 100 million pesos now against the next decade of cash flow. I convert the 100 million pesos into $100 million. And so instead of waiting to lose $70 million or $75 million worth of cash flow value, I immediately lock in the next 100 million. So I finance my future local currency cash flows because they're weakening. So what would you do next? Okay, I converted 100 million pesos of cash into $100 million, and I saved a $99 million loss. Then I financed 100 million pesos into cash, and I saved another $99 million loss. Okay, so I'm up $200 million. What would I do next? Well, I would go and finance all of my fixed assets on that ranch. I've got all this property. There's no debt against it. I put a mortgage against it, and maybe I put 100 million peso mortgage against that ranch. I convert that to dollars. And when 10 years have gone by, I'll have another $100 million. So I have 300 million US. If I don't finance my ranch will be worth 100 million pesos in 10 years, and that 100 million pesos will be worth $1 million. So it's another 99% destruction. Okay, finance your cash flows, finance your fixed assets. What would I do next? Well, I might actually think in terms of issue equity in my ranch. If I could actually sell ownership, let's say my ranch was worth 100 million pesos. I might sell 100 million pesos worth of stock in the ranch, convert that into $100 million, and otherwise, in 10 years, I'll have a ranch worth 100 million pesos in stock, which will be worth $1 million. So you would basically finance anything you could finance. You would you would issue equity in the local currency and convert it to dollars. And those are all balance sheet activities, right? I'm basically converting cash, financing cash flows, financing fixed assets, and I'm issuing equity in the currency, which is going to weaken so as to buy the currency, which is going to strengthen or hold its value. Now, that's the balance sheet side. What about the P&L side? Well, on the P&L, I would want to shift my sales to markets that pay me in US dollars. So if I can sell my existing product, my steaks, my whatever, into the US and get paid in dollars, then that's probably a good idea, because $100 million a year worth of sales is going to be worth $100 million every year for the next 10 years. If I keep 100 million pesos a year worth of sales, then they're going to collapse. So my revenues will collapse. If they're in Argentine pesos, they'll continue, they'll hold their value in dollars. So I would redirect my sales and marketing to the hard currency market. Now, I would probably, what if the United States market or these other markets required a special type of product? Maybe I have to freeze dry or I have to package my steaks to ship them long distance. I'd create a new product for that market that I could sell in US dollars. If I'm a CFO, I would want to enter into contracts that are denominated in, I want my revenues to be denominated in US dollars. I want my costs, my purchase contracts, to be denominated in local ARS and local pesos, because that way my costs will collapse, whereas my revenues will hold their value. It will look like my revenues are exploding through the roof. It'll look like if I'm selling in dollars, converting back into pesos, it'll look like my revenues went from 1 million pesos to 2 million to 4 million to 8 million to 16 million to 40 million to 100 million to 200 million, et cetera, because I'm shifting between those two currency systems. Ultimately, what I want to do is I want to expand my business in the strong currency, i.e. the USD markets. And I might even decide over time to relocate my entire business. If you take this to the extreme, sell everything, convert to USD, and then relocate large portions of my business or my marketing operation to USD markets. So that is, in essence, a hard money strategy. That strategy is the playbook that any corporation in any country on earth that had a collapsing currency or a weakened currency would pursue rationally, even without considering the technology component we have at play here, right? If digital gold, if Bitcoin is just digital gold and it's harder money, then this is a macroeconomic idea that you want to be thinking. Now, it's more than that, right? Because Bitcoin is a monetary network, so there's a technology aspect which provides another opportunity for CEOs, but we'll come to that in a second. So, big idea. Let's talk about Bitcoin. Corporate strategy for Bitcoin. If you want to maximize shareholder value, you want to preserve or create shareholder wealth, then you can either work on a balance sheet strategy for Bitcoin, or you can work on a P&L strategy for Bitcoin, or you can do both. The balance sheet strategy for Bitcoin is convert your fiat cash flows, your treasury, into Bitcoin as much as you think you can. Second, convert fiat derivatives into Bitcoin. If you have investments in stocks, bonds, real estates that are denominated in the fiat currency, which you expect to weaken, right? You won't be protected over the long term, because if you have a stock which is going to generate $1 billion worth of pesos and the peso is going down by 99%, the stock is also going to depreciate in the same way. So if you're a corporation holding a treasury in cash, you convert it to Bitcoin. If you're holding a treasury in stocks, bonds, real estate, or other cash derivatives that are valued based upon cash flows, you would also sell those, convert those into Bitcoin. You could issue debt in dollars, and then you can convert the dollar proceeds, the fiat proceeds, into Bitcoin. This works, by the way, in pesos. It works in euros. It works in any currency. You in essence issue debt in the local currency, and you convert it into the strongest monetary asset, which is Bitcoin. You could also issue equity, right? If you've decapitalized your company, if you're running with a very thin, if I'm Apple Computer, instead of issuing $100 billion of debt and buying back $100 billion of stock, maybe I issue $100 billion in equity and I buy $100 billion in Bitcoin, because if Bitcoin is appreciating at 200% a year, and you're investing in a company that's growing its cash flows at 20% a year or 10% a year, it's dilutive to the shareholders, right? You want to actually invest in the thing that's appreciating the fastest. And right now you've got 10 years of history of Bitcoin appreciating at 200% a year. If when you decide what you're going to do, you have to consider, is your forecast 100% a year, 50% a year, 20% a year? What is the appreciation rate you're going to forecast? I think that it's very reasonable to expect that a strong money asset is going to appreciate at the rate of money expansion, plus with an additional driver of technology utility and technology diffusion or adoption, with a third driver, which is just broad-based network adoption. And all of that gets you to a number which is in excess of the expansion of the M2 money supply and the cost of capital. So convert your cash derivatives, and then issue debt, and then issue equity, and then if you can, finance your future cash flows, or convert your future cash flows directly into Bitcoin, right? These are all balance sheet strategies you can pursue depending upon what your balance sheet looks like and how financeable your company is and what kind of access to equity or debt lines you might have. Every company on earth can do that, right? Every company has some amount of treasury and assets. And if you're highly levered, right, you can issue equity to get less levered. If you have no debt, you can issue debt. If you have debt that's invested in something, you can refinance it. So the balance sheet strategy applies to 100% of companies. What about the P&L strategy? Well, P&L strategy consists of the following ideas. Number one question: can I build an open product powered by Bitcoin? And can I build a product powered by Bitcoin? What does that mean? Well, let's say I have a mobile payment application like PayPal or Square. If I allow you with one click of a button to convert $10,000 US into $10,000 worth of Bitcoin, I've created a mobile app and it's plugged into the Bitcoin monetary network. And of course, I'm going to give my customers one button to convert a $10,000 liability that's going to depreciate in value by 15% a year into a $10,000 asset, which is going to appreciate in value at 100 or 200% a year. That's a product powered by Bitcoin. Now, what do I mean when I say open or closed? If I allow you to buy a whole Bitcoin, and I also allow you to take custody of the Bitcoin and transfer it to a hardware wallet or to a different custodian, it is an open system, open product. And I might very well get 100 million new customers that want to buy a Bitcoin on my mobile app and move it to another custodian. Coinbase has an open product powered by Bitcoin. What about closed product, closed system? Well, what if I actually let you click the button and buy a Bitcoin, but you can't move it off of my product, off of my mobile device? That's closed or proprietary. Okay, well, on one hand, it's less appealing to people that want to be able to take custody of their product. On the other hand, it would be more appealing to the shareholders of your company, because if $100 billion of Bitcoin gets purchased on your mobile app and you can't move it off of the mobile app. You become a bank with $100 billion worth of permanent capital. If you have a business model that generates a 1% fee, then you're going to get 1% of $100 billion. And you're going to get it until your customers exit that relationship. And if you have a closed or proprietary system, they would have to sell the Bitcoin and pay capital gains tax to exit. And that might be, if the capital gains tax goes to 45% and you have $100 billion of capital tied up in your mobile app, then your customers will have to incur a $45 billion tax in order to exit your mobile app. So that's kind of customer lock-in. Okay, well, if you're a libertarian, you're going to hate that idea. You're probably not going to want to buy that app. If you're tax efficient, you're going to hate that idea. But, maybe I make it easy. I give you low fee or no fee, or maybe I give you 2% back, or I give you a benefit, or maybe just people want to do it because I'm the only game in town. I suspect that if Apple or Google let you do this and they deployed it to 1 billion people, they would probably have hundreds of millions of people that might not mind being in a closed system. I mean, after all, lots of us have our photos or communications or digital rights or our passwords locked up in some of these cloud-based systems from Apple and Amazon and Google. And so you can actually capture the Bitcoin asset into a closed network, or you can have it in an open network. It's a business strategy. I have opinions about what I like. Other people have opinions. But the point is, when you're sculpting your product, you decide, is it a proprietary product or an open product or a mixture of both? And there's a continuum there. You can also drive revenues on your P&L by building Bitcoin tools. You can build software tools. You can build hardware tools. And of course, you can offer Bitcoin professional services that are critical to everyone in the space. So all of these things will drive revenues and they'll drive cash flows if you choose to enter the space. So let's rifle through some examples of companies right now. Grayscale. Grayscale offers a closed-end fund, and it's powered by Bitcoin. And it is an example of a closed product. So if $10 billion flows into the fund, then that gets converted to Bitcoin. They issue shares. The shares might be sold in the open market, but the Bitcoin, the $10 billion of capital, stays in the Grayscale product. If Bitcoin doubles and doubles and doubles again, eventually Grayscale has $100 billion worth of assets. If their business model is a 2% fee a year, they'll eventually have $100 billion of assets with $2 billion in revenue, growing at the rate of the Bitcoin monetary network forever. It's a good business. It's a great business. It's very interesting. Fidelity. Fidelity has a different business strategy. They have Fidelity Digital Assets. You can buy Bitcoin on the Fidelity Digital Asset platform. You can custody it with them. So they generate fees from custody. They generate fees from buying and selling for you. And you can take delivery of your Bitcoin. You can move it off of their custody platform into your hardware wallet. So it's more of an open product rather than a closed product. But they've got this custody solution, which is ongoing. And to the extent they offer you good services, then they will accumulate billions and billions of dollars of assets and expand that business over time. NYDIG. NYDIG is an example of a business that's a hybrid. They've invested their balance sheet in Bitcoin. They have substantial treasury holdings in Bitcoin, and they sweep cash flows into Bitcoin. And on the other hand, they offer brokerage services and custody services and value-added products, and they offer funds. And these are all products that are powered by Bitcoin. And they all meet a different requirement. So they're actually driving revenues, driving operating income, driving assets, and driving investment income all at the same time. PayPal. PayPal has more of a closed product. They make it very, very easy to buy Bitcoin and perhaps to sell Bitcoin. It's not so easy to take delivery of the underlying Bitcoin. When 100 million people have bought Bitcoin on the PayPal platform, they will have migrated tens of billions of dollars of capital onto the PayPal platform. They're in essence a consumer bank using Bitcoin as a monetary asset. Square has offers you the ability to buy Bitcoin, trade Bitcoin. They're more open with regard to Bitcoin, and they will allow you over time to take custody. And so it's a slightly different strategy. Marathon is a Bitcoin miner. They actually have on their P&L a very direct idea, mine Bitcoin. But on the other hand, on their balance sheet, they bought Bitcoin. So they also are exposed on the balance sheet and the P&L. MicroStrategy has a balance sheet exposure to Bitcoin. We actually converted our treasury into Bitcoin. We sweep our cash flows into Bitcoin, and we've issued debt, which we then convert into Bitcoin, right? So we've got a leveraged balance sheet strategy for Bitcoin. Coinbase is actually trading and offering custody services and other related services in a fairly open model on top of Bitcoin. Binance has got a broad range of services, and they're moving in. Not only are they trading and custodying services, but they also offer derivatives for futures, calls, puts, etc., and even payment type services. And they're evolving into a broad-based consumer and institutional bank for Bitcoin. Bitmain generates hardware. They create hardware that you can use to mine Bitcoin. It's a very special purpose tool for Bitcoin. So what are the general opportunities here for Bitcoin P&L strategies? You can get in the mining business. If you get in the mining business, you're going to want to find a clean, cheap, renewable source of energy. But anybody can do it anywhere in the world. It crosses all regulatory jurisdictions. You can be an exchange. You're going to want to have exchange capabilities. You can broker Bitcoin. You can be a custodian of Bitcoin. You can be a bank. You can be a commercial bank where you're extending loans or helping to generate yield or the like against Bitcoin as collateral. You can be a fund. A lot of corporations benefit from investing in Bitcoin as a fund. Funds, under some circumstances, can give you GAAP accounting treatment and investment income, which is more favorable on a balance sheet or a P&L than having intangible asset accounting treatment. So I, as a company, might want my Bitcoin to be held in a fund, either because it's easier, I can execute quicker, or it's more secure, or because of my charter doesn't allow me to hold the underlying asset, or because I prefer the accounting treatment that a fund might offer me. And so this is valuable. You can be in the derivatives market for Bitcoin. Here's an interesting one. Bitcoin's going up at 200% a year. The world's full of people that are afraid to own it, even though it's going up on average 200% a year over a decade. On the other hand, if JP Morgan or Morgan Stanley said, we will guarantee you 10% taxable yield every year, you would have hundreds of billions of dollars flowing into those products. If you gave someone a structured product that guaranteed 10% yield, you could keep the other 90% yield. So if you create a bank that issues a structured bond, a bond that yields 5% or 10% or 20% over 5 years or 10 years or 30 years, people would buy that, and you could keep the extra 170% yield. All you have to do is post the equity as the collateral, and then you have to be a creditworthy counterparty. So you could think of this as like a Bitcoin swap. In traditional markets, people would say, I'm going to guarantee you 160 basis points and in return, you're going to pay me the short-term interest rate. That's a swap, short-term rates versus a fixed long-term rate. Well, if you give someone a fixed 10% yield on Bitcoin, give me $1 million, I'll invest in Bitcoin, I'll give you 10% forever, but you give me everything above 10%, that would be pretty lucrative, right? So there are interesting financial businesses where you get into issuing swaps and issuing bonds. All you got to do is be a credit-worthy counterparty and have some equity capital so you can stomach the near-term volatility. This is a nation business. A similar angle on that is insurance. Right now, insurance, people buy insurance, they pay premiums. Those premiums are getting invested on insurance company policies into things that yield 3% a year. Imagine if I took your insurance premiums and I invested in something yielding 30% a year. Imagine if I invested in something yielding 150% a year. You could, in theory, give someone a life insurance policy where they pay in $100,000 of premiums, and then, on their death, it pays their heirs $50 million, right? Some huge amount of money. Or you could reverse it and you could offer people life insurance policies that cost 1/2 or 1/3 in premium by investing a portion of those funds into Bitcoin instead of into 30-year swaps, because a 30-year swap yields 160 basis points for 30 years. It's an awful instrument, and yet people fund with it right now. So insurance is ripe to be disrupted. Credit card is another interesting P&L strategy. People pay 12 to 20% for unsecured loans from credit card companies. What happens when they actually post Bitcoin as the collateral? If I basically moved my Bitcoin to you and you gave me a 6% loan or a 3% loan, I could eliminate all that unsecured debt. In fact, you could pretty much rip tens or hundreds of billions of dollars of capital away from the credit card companies, and you could move it to a consumer bank that uses Bitcoin as collateral and issues consumer loans against those. And that takes you back to the PayPal example. PayPal talks about they're going to allow you to fund your purchases off of a Bitcoin account, but really the future of this business is I post $50,000 of Bitcoin or $20,000 in Bitcoin, and then I borrow against it. And as Bitcoin appreciates, I never sell my Bitcoin. I never incur capital gains tax. I pay 5% interest against an asset appreciating at 50% a year forever. And so you can reform consumer debt. If you're a device company, look, the screaming opportunity for Apple Computer is build a hardware wallet into an iPhone or build multi-signature into the Apple Watch, the iPhone, and the iCloud. There's a world where you will be able to take your Bitcoin off the network, move it. What is it? Cold storage, or is it sort of the key is sitting multi-sig between the iCloud, your iPhone, and your Apple Watch in some secure relationship. They can build the secure elements into the computer, into the wearable, into the hardware device, into the phone, or into the back end of the network. I think this is an opportunity for Samsung, for Apple. If you build software like Microsoft, you can build support for Bitcoin into Windows. You can build it into Android. You can build it into iOS. You can build it into all your cloud offerings. You can build it into your back-end server offerings, and anybody in the hardware business probably has a play here. If you're a semiconductor company like Qualcomm or Intel, the obvious play is to actually start to spit out SHA-256 ASICs or secure elements of the like. And it's a market that's going to explode. If you do data centers like AWS or Microsoft or Google, well, the greatest data center is that Bitcoin miner. And if you create modular Bitcoin mining data centers and you're back integrated into semiconductors, you could drop them in the middle of Africa, on a pad next to shut-in or stranded energy, and that could be an interesting thing. software companies, well, we already talked about the operating systems, but for Facebook, for any kind of messaging company, you can build support for the Bitcoin protocols and the Lightning protocols into Twitter, into Signal, into WhatsApp, into Messenger applications, into any social network, any communication network, and that's the network opportunity. I don't really have time to discuss all of those right now, but I'll just move on to just one final set of thoughts, which is there's a macroeconomic wind blowing. It's going to impact $400 trillion of capital. That capital is sitting in fiat instruments that are being debased. That capital is going to want to convert into strong money. And so if you support an on-ramp to convert that layer of money in that regulatory jurisdiction into Bitcoin or a derivative of Bitcoin, you've got a massive business. So think about a Cartesian system. There are layers of money, there are jurisdictions. Consumer savings is type of money. Retirement accounts is a type of money. Institutions have money. There are equity funds with money that can invest in the stock market equity. There are debt funds. They have another flavor of money. There's corporate cash, treasury reserves with another flavor of money. There's state and local governments with flavors of money, pension funds, annuities, federal governments, futures and options market. They're all flavors of money. In the US, there's a sort of regulatory jurisdictions. If you can solve the compliance issues, you can convert that flavor of money into a Bitcoin derivative. It'll be a different problem in Argentina. It'll be different in the EU. It'll be a different set of regulatory jurisdictions in the UK or any other country. So if you're in this business, you have to solve the regulatory compliance issues that are changing. Then you have to offer a product for that flavor of money, and don't fall into the trap of thinking that there's one size that fits all. There isn't. There's someone who can click on a button in PayPal and they can buy some Bitcoin, and that's all they can do, and they'll be happy. And there's a corporation that can buy a Bitcoin fund and they can buy $1 billion of it in a day, but that's all they can do, and they'll be happy with that. But they can't buy the one in the UK or Malta. And there's a company in the UK that can buy it a different way. If you solve the problem of how you transform the layers of money in the jurisdictions into Bitcoin derivatives, then you're going to see trillions of dollars of capital flow, and you will either capture the capital in your bank or in your app, or you'll enable it and you'll get paid. So with that, I want to wrap up with just big idea. If you have a weakening currency, right, the real issue is capital flight. Capital flight from the nation, capital flight from a company, capital flight from a family. If you're a corporate CEO, you need to preserve your capital. Then you need to invest your capital in something which is strong money that's going to appreciate faster than the rate that the capital and your cash flows are losing their purchasing power, right? So, stop the bleeding, right? The idea that you should give up all your capital and decapitalize the company, leverage yourself up is the equivalent of bleeding George Washington to death, right? The physicians thought they were going to save his life by bleeding all of the toxins out of his system. But capital is blood. It's not a bad thing. When the cost of capital goes up, then the solution is not give up all your capital. The solution is expand your balance sheet and invest the capital into strong money that's appreciating faster than the rate of money expansion. All of these corporate strategies, they all come down to the same idea, which is generate strong money, find a way to attract strong capital, attract Bitcoin or Bitcoin derivatives as revenue, find a way to generate operating income based upon those strong revenues. Find a way to hold that capital on your balance sheet, and then make sure that you're converting and financing all of your other assets, which are fiat derivatives, into the strongest monetary asset you can. If you do those things, then there's no reason to think that your purchasing power won't appreciate, your revenues appreciate, your income, either operating income or investment income, will appreciate. Your shareholders obviously will react favorably to that. Shareholder value will appreciate. Your stock price should go up in the public market. And the private market, your balance sheet and your earnings will simply appreciate. And that should continue for quite a while, right? We're at the beginning of a very, very long trend here. And so with that, I have more stuff to say. I don't have time to say it, but, follow me on Twitter and stay tuned. And we'll share more on these topics as time goes by. And meanwhile, I will cede the floor, and we'll be moving on shortly to our session on the corporate playbook and legal considerations and finance considerations. So thanks for being with us today.
All right, that was Giga Chad holding court for the past hour, talking about the Bitcoin corporate playbook, and that was some good stuff. That was good. If you're not feeling bullish right now, I don't know what's going on. Thank you for joining us on Clubhouse, on YouTube, on Twitter, on Twitch, and on Facebook. We are streaming live this conference on 5 different platforms just for you. Now, Swan Bitcoin, inspired by this conference, inspired by Giga Chad and MicroStrategy, and the new narrative of corporate reserve asset being Bitcoin, have launched Swan Private Client Services. So we just launched this today in conjunction, well, not in conjunction, but because of this conference today, so we thought it would be a good day to launch. Swan Private is at swanbitcoin.com/private. And we can do big buys for you. This is for corporations, institutions, and high net worth individuals looking to buy at least $100,000 worth of Bitcoin in a 12-month period. We, of course, help you make an initial buy to establish your position. And then, of course, as we're known for, we make it easy for you to smooth out that market volatility over time with automatic recurring buys. So whenever you have more capital to deploy than already planned, we can make one-time purchases of up to $100 million with no annual limits. So Swan is really expanding its offering to support this corporate reserve asset strategy, and high net worth individuals who are looking to get into Bitcoin. We would like to partner with you on your Bitcoin journey and guide you toward building generational wealth in Bitcoin. And of course, as Saylor was talking about there, Bitcoin protects your wealth. The dollar has lost 90% of its purchasing power since 1950. Bitcoin's fixed supply makes it the best way to protect your wealth over the long term. You know it won't be inflated away. And as we've seen just in the past 70 years, the dollar has lost 90% of its purchasing power. So if you're looking to preserve your wealth over several generations for your corporation or for you as an individual and your family, Bitcoin is the answer. And it's very fortunate. we're very fortunate as a planet, as a global economy, to have this as an option now, because the dollar had been the store of value mechanism or property of the dollar has been completely stripped as of about 1970, when the gold standard was removed from the dollar. So at Swan Privates, you'll get some benefits. Of course, you have direct access to the Swan Private team. We support large wires so that your transfers come in quickly and settle quickly. And if you'd like to withdraw your Bitcoin without having to wait for ACH settlements, then you can do that with a wire. It settles much more quickly, and we can withdraw for you. Tax form assistance, retirement account guidance, self-custody guidance. So we'll be here on every step of your journey. Now, the next big announcement that I'd like to make about Swan Private is that we brought in a heavy hitter to direct this new offering. Robert Breedlove, who most of you will know, is one of the top authors and thinkers in the Bitcoin space. He's also got tons of experience in the finance world, and has worked as an accountant, as a CFO, and consulted with many corporations about their finances. So he's got the experience, he's got the passion, obviously, for Bitcoin, and the experience to work with corporations and high net worth individuals on adopting Bitcoin as a reserve asset. So we're super excited to bring Robert Breedlove on the team and add him to the Swan Squad. It's going to be really fun to get to work with Robert more closely. You can, of course, find some of his writing. He started publishing a series on the Swan Signal blog at swanbitcoin.com/signal. We have a couple of pieces that he published on our blog, and he's just started a new series, a 12-part series on sovereignism that is inspired by the book The Sovereign Individual. So check that out, swanbitcoin.com/private. Check out Breedlove's work and on the Swan Signal blog. And again, we're really excited. It looks like we're about to jump back in here to Bitcoin for Corporations at the MicroStrategy World Now conference. We're looking at the Bitcoin for Corporations track.
What did I wish I knew about a year ago when we went through this journey of investing a significant part of MicroStrategy's balance sheet in Bitcoin and treating it as our primary treasury reserve asset? So we'll go through a playbook.
Sheet strategy, which includes our investment in Bitcoin.
Awesome. Thanks, Jeremy. If you didn't follow along there, Jeremy, in his roles over at Treasury, IR, and FP&A, pretty much ran a large portion of the financial side of our investment in Bitcoin. So let me jump in and just sort of walk everyone through the phases that we went through. The document you see in front of you that's available on our website is a bit genericized, but it really does follow most of the steps that we, MicroStrategy, went through in this process. And I think it'd be very beneficial for all of you who are considering something similar. You heard Mike talk about all the different ways to invest in Bitcoin, whether it be a P&L strategy, whether it be a balance sheet strategy. We're going to primarily focus on the balance sheet section here, which is what a lot of other publicly traded companies are looking at. And so we'll walk through it top down. But the first piece, before you really start anything, is you really want to figure out what is your purpose, right? You know, is this a P&L strategy? Is it a balance sheet strategy? Do you want Bitcoin to be your primary treasury reserve asset? Do you want it to be a portion of your investments? Do you want to get into Bitcoin mining? Do you want to run a Bitcoin node? Do you want to get on the blockchain? Do you want blockchain analytics or blockchain technology to be part of what you want to do? And this is really a conversation that needs to happen at the executive level, right? It's a major strategic initiative for a company. And for us, we had these discussions with Mike, with myself, the rest of the executive team and the board. And you'll see as we go along here, getting that level of alignment is critical. And so getting the alignment on the overall strategy is really the first piece here. And maybe, Jeremy, you can shed light on what exactly is MicroStrategy's strategy. A lot of you who are listening probably already know, but it's probably useful for those who are not as familiar with how we're treating Bitcoin overall.
Yeah, Phil, thanks. We decided on a balance sheet strategy and made Bitcoin our primary treasury reserve asset. What does that mean? We basically converted all of our cash to Bitcoin. We converted our excess cash flows into Bitcoin. We will convert our excess cash flows into Bitcoin. And we've also acquired debt and converted that cash into Bitcoin. And so the balance sheet strategy is a buy and hold strategy. It's different than choosing the operational model or the P&L strategy. For example, mining Bitcoin or using it in our day-to-day operations. It's a very straightforward approach that we felt made the most sense for us, given the company's a business intelligence company, and the vast majority of our employees, 2,000 or so, are focused on developing business intelligence products and supporting our customers.
Yeah, and that's an interesting point you made there. Even though this is a pretty fundamental part of our strategy and our valuation, it doesn't have to be that distracting, right? You want the executive team, you want the board aligned. But of 2,000 employees in our company, probably 5 FTEs were able to pull this all off in a fairly short period of time. And that gets into this next piece. What is the internal team, right? Who is really going to work on this so that you can go move quickly, nimbly, but also have all the right experts in place. And in this case, you want to know who the champion is. In our case, it was Mike. As you probably all know, Mike Saylor, our CEO, is our champion. You want to get a finance working team together. You need the CFO in place. That's myself, Chief Accounting Officer. You want somebody who's responsible for SEC reporting. If you're a public company, you want your treasurer. You want somebody representing tax, internal audit, investor relations. All those pieces are pretty important. And there are all dimensions that you need to be aware of and work through. Also getting a legal team in place, right? Our general counsel, who you hear from later, Ming Shao, critical from a legal perspective. Having attorneys on the corporate side and also attorneys on the contract side lined up. And then there's an important and sometimes not thought about component, which is your technology team, your IT team. In that particular case, your CIO and or your CISO need to be involved because there are security matters and risks that arise with an investment in Bitcoin also. And then bringing that team together, talking about the purpose, talking about the objectives, and then really starting to lay out a timeline and a roadmap, right? Like with any major project that you take on as a corporation, we want to have a timeline and a roadmap in place. Who owns what are the key activities? Jeremy, maybe it's useful for you to shed some light on the timeline that MicroStrategy went through.
Yeah, the timeline, there's a lot going into the planning effort, but the timeline, I think it took about 4 months for the planning phase. And it includes all the things that Phong just talked about, getting alignment on strategy and identifying the team and getting a sense for the types of things that you're going to be tackling. And during that time, obviously, it became clear for MicroStrategy that Bitcoin was the asset class with the best store of value and upside. So we had made our decision. And once we were aligned on that strategy and the overall, I think it probably took about 2 months for us to complete the process of executing, whether it be board approvals, executing on the plans for governance, finance, and IT considerations, and onboarding our vendors and being able to acquire Bitcoin.
Great. And the final, I'd say, pre-planning step, if you will, now that you have your strategy in place, you've got your internal team in place, it's really getting a team of advisors in place. And this is pretty critical. There are probably in the number of dozens, not hundreds of people in the US who work in the intersection of Bitcoin and of corporate law and of corporate accounting and finance who really have been working in this space for a long time, call it 5-10 years. You'll hear from some of them later today. on the legal side and on the accounting side, but you really want to talk to and work with folks who have done this a few times before, who aren't learning it for the first time. And so on the finance side, on the legal side, you want to have corporate governance attorneys who can advise you. You want to have regulatory and SEC attorneys who can advise you, and the contracts folks. You may have some folks in the house, but here I'd recommend, unless you sort of have people who are really niche and expert in these areas, it's worth going outside and finding folks also to help you out as you undertake this. On the finance side, you want to have some accounting advisors, right? You'll hear from some later today. Tax advisors, folks who understand internal controls as it relates to cryptocurrency, treasury, and then your auditor, right? Like, those who are public companies, you have an auditor, and you want to make sure they're aligned too. And so those are all pretty key pieces. In addition, if you're thinking about investing in a fund, or if you're thinking about raising equity or debt as a strategy also included in here, you want to have some bankers involved. And so getting this team together and defining your strategy, getting the team together, really then lays out all the rest of the steps that you go through from here. And it's something that you definitely don't want to short shrift. It's something that you want to think through fairly thoroughly. The next set of steps that we'll talk about is corporate governance. And in this particular case, we'll go a lot deeper in the next session, which is Bitcoin legal considerations. But at a high level, you want to make sure you go through all the steps to inform yourselves, conduct your fiduciary responsibilities, get the board on board. First thing is just do some research, right? Like you may think you know a lot about Bitcoin, which is awesome, but not everyone that's on the team may know a lot about Bitcoin, right? And there'll be varying degrees of knowledge. The awesome part is there's a ton of very good research and documentation, whether it be from large banks, well-respected publications, to YouTube, to Twitter, to articles written all over the place, and including those things that are published by publicly traded companies. We, as I mentioned, have a lot of our materials now available on our website. Also, we have a Bitcoin portion of our website that is more geared towards MicroStrategy and what we've done, but is also a useful resource. And what you really want to do is bundle up the best things and get everyone up to speed, not just on sort of Bitcoin for corporations, but the background of Bitcoin, right? Like assign them some reading there. There's nothing wrong with doing that. It's good to get everyone on the same footing. And the other thing that you do by doing this, and as many of you know, is once you've done the research, once you've gone deep, it is very intellectually stimulating. And most people, by the time they've gone through it, understand and are big advocates of Bitcoin. So you'll have a team of people not only who are well read and well understood, but who now are also driving and all rowing in the same direction. You'll want to put that stuff together and start to summarize also your investment strategies in the past. Right? You want to talk about how does Bitcoin fit into what has happened in the past, right? What are some of the key considerations that then you can use to facilitate board and management decisions and get people on board? And it's there is almost a light bulb, a switch that flips when people start really saying, "Oh, this makes complete sense." Sort of like what Michael and Ross have been through, right? Like there is an education process. Some it takes minutes, some it takes hours, some it takes days, some it takes weeks, usually not months. But when that flip switches, you'll have a team of advocates who are ready to move forward and really just completely change how you look at your business and your treasury strategy. From a regulatory perspective, you want to put together all the key regulatory considerations. When you start thinking about how you are going to invest, which we'll talk about a little bit later, there are things that might come up, such as Investment Company Act implications, considerations that you want to go through. And then you also want to look at conflicts of interest, right? You know, one thing that you'll find out, which will surprise you maybe, is as you start looking at the team and asking, so do you own Bitcoin? People will surface and say, oh yeah, I've had Bitcoin since 2013. I've had Bitcoin since 2015. Those are considerations when you start getting active into the Bitcoin market and start to trade, to purchase, either through funds or directly. You'll want to know who has what and what conflicts may exist also. Maybe this is a good time to segue quickly into the actual documents that we've made available. And Jeremy, if you don't mind, just list off what we made available in terms of open source and redacted documents from our Bitcoin work.
Yeah, we shared 7 documents with everyone to help them develop their Bitcoin strategy and get a feel for what it takes. The documents are on the landing page on the Bitcoin for Corporations section of the world.now site. The first provides a summary of the key considerations for corporate investments in Bitcoin. It correlates very nicely with the track that Michael just wrapped up before this. The second, which we're talking about right now, is really focused on the project roadmap. What are the things you need to do? It gives you a playbook for the major phases and next steps to consider in developing and executing the Bitcoin strategy. The remaining documents are best suited to address a number of governance, finance, and IT considerations. So the third document is the Treasury Reserve Policy that provides a framework for implementing and managing corporate treasury with Bitcoin as the primary treasury reserve asset. It includes examples of how to define what cash will be used for investing and who is designated to approve transactions, what employees are authorized to carry out the management of the policy, security protocols, and other key governance considerations. The fourth document is the Bitcoin trading policy, which provides a framework for thinking of conflict of interest, use of corporate information in personal transactions involving Bitcoin. You also see examples of who's impacted by the trading policy, what constitutes material non-public information, and the like. So the fifth is contractual considerations for digital asset custodians, in which you find essential information in establishing a relationship with a custodian of your Bitcoin. And any company that plans to acquire Bitcoin should consider their holding their digital assets in custody, which is considered cold or offline storage, not connected to the internet. Custody is the equivalent of a bank vault to store your assets. The legal team will talk more about the policy and contractual considerations in their session after this. The final 2 documents provide a framework for accounting and tax related to Bitcoin. The document provides insight into Bitcoin controls, balance sheet accounting, how to measure Bitcoin value and evaluate it for impairment, how to account for the sale of it, and ultimately, the accounting implications of the investment. So Phong will talk a little bit more with the Deloitte team about that. There's a document from Deloitte as well that talks specifically to the tax considerations.
Great. I've received questions quite often as to why are we doing this? Why are we making all of our work that we spent hundreds of thousands, if not millions of dollars in advisor fees and our own time putting together? And there's really 2 reasons. One, we as a corporation are very bullish on Bitcoin. We believe it is the future for many corporations in a P&L strategy. But even before that, a balance sheet strategy. And there's really no reason why every publicly traded company in the U.S. and more so the world shouldn't at least have some of their treasury in Bitcoin, if not all of it. And to help with that vision and that belief, these documents can really spearhead the efforts and so can these sessions. And the only thing I wish is that they were here, when we started this process close to a year ago. The other thing is it's very consistent with the ethos of Bitcoin and of cryptocurrency, which is to open source and to share openly the work that we've done. And that's important to us. And we believe in that in terms of a worldwide currency. We believe in that in terms of what MicroStrategy, the company, does. If you think about our software too, right? We provide, we're an independent BI company that believes in opening up our platform so that we are not platform dependent, we are not source system dependent. We let people access our code via APIs, etc. It's very consistent with what we believe in financially, we believe in from a corporate strategy, and we'll continue to do. And I guess the third reason is a bunch of folks in public and private companies have asked us for the documents. And we said, well, why don't you sign an NDA and maybe we can share with you what we've done, or we can just make it available to everyone. So we're excited that we're doing it, and hopefully you all find it useful too. Let me go on to the next phase. And this one is very close to me and close to Jeremy too, I know. which is really the finance and the IT pieces of planning. Here, there's a lot of analysis to be done. And you know, as you can look at our accounting memo, it's quite thorough. And that was a big part of what we needed to do, which is to understand how we should account for Bitcoin. There is GAAP precedent that we'll talk about later, but there is specific situations that every company, ourselves included, get into. So you need to understand the accounting considerations, a lot of thoughts around tax, right? Whether you, you know, sort of have a loss or a gain on your Bitcoin on your balance sheet, how do you tax for that? And then inter-company and inter-border, you know, movement of money for and Bitcoin also has tax implications. Internal controls is a big one. You know, as we work with other providers, whether it be exchanges, whether it be custodies, whether it be custodians, whether it be funds, making sure that they have all their right controls in place, SOC 1, SOC 2, you know, 2 reporting, and all those types of things have to be considered. Also, you know, I mentioned considering the Investment Company Act and seeing that applies to you. Whether the company and what company entity to use as an investment vehicle, that's important to know. And also, you know, looking at audited financials at the Bitcoin vendors and partners that you're going to be working with. So a lot of analysis to do on the finance side before you make that first investment into Bitcoin. And then also, where's the money coming from? Right? What are the sources of funds? What funding needs may you have? Are the sources of funds onshore, offshore? Do you need to repatriate cash to be able to invest in Bitcoin? Both of these areas, I'll call it the accounting, tax, treasury analyses, are not much different than opening a new bank account, right? They're akin to that, or they're also similar to if you were to decide to invest into a new treasury asset, invest into a corporate bond, invest into a fund, but they come with an additional layer of learning. That's where having advisors in place who sort of have done this before are very important. The IT side, sometimes people don't think about, right? Like the reality is when you as a corporation, public company, are to invest in something like Bitcoin, you're going to raise your profile. And in doing so, your social profile, your security profile. And so you have to think about what are the IT risks, what are the security risks, is your IT network and infrastructure, is it resilient, right? Like you may be subject to more external attacks, potentially a DDoS attack, phishing attacks. Do you have those right pieces in place? Have you thought about that? Impersonation. And so you want to work with your hosting providers, ISPs, cloud providers, and you want to do pen tests. You want to have some security partners in place, right? So you don't want that to be an afterthought after you made an investment in Bitcoin and you find that some bad actors have thought and found out about you and want to do something to try to either access your corporate network, disrupt your network, or even get to your Bitcoin somehow. So an important consideration that sometimes organizations overlook. And then the next one, you know, we get questions all the time, right? What is the insurance landscape like out there for Bitcoin and cryptocurrency? And Jeremy, I know you spent a lot of time getting to understand the landscape. Maybe you can share with the audience some of what you learned in the process.
Yeah, Phil. Thanks. Look, the first question we asked was, is there such a thing as Bitcoin insurance? And I think everyone would be relieved to know that obviously there is indeed a market for Bitcoin insurance. I think first you should start with your custodian who should be providing some sort of coverage. While custodians may not insure all of your Bitcoin depending on how much you're investing, they should offer liability coverage that will protect you in the event of loss, typically with respect to issues that occur from within the custodial services company. When discussing insurance with a custodian, you want to focus on key exclusions as policies often carve out certain issues from coverage. You also want to make sure you're added as an additional insured on each custodian's policy and make sure that you see the endorsements so you know what you qualify for. You should expect that the custodian will provide at least some insurance coverage as part of the service they're providing. You shouldn't be paying an upcharge for the basic coverage. And it's important to note that, you know, the custodian's insurance is not going to pay for or won't provide coverage for bad actors or theft or negligence arising from within your own organization. organization. In order to get that type of coverage, you're going to need to acquire supplemental insurance. You can expect that custodians would have arrangements with insurance carriers or relationships that can offer that supplemental insurance, and they might be able to introduce you to some of those brokers. This type of insurance program is typically called a specie program, and the insurance market for Bitcoin is still in its nascent stages. But and as a result of that, the costs are relatively high to other corporate insurance programs. So you should know that going in. For supplemental insurance, you should work with your broker, but you're likely to focus your time on your crime policy, your cyber policy, and your D&O policies. And as Phong has mentioned a few times now, you'll want advice from an expert or multiple experts on what's best for you and your company, depending on the amount of your investment and the transaction risk associated with your Bitcoin and governance practices. I focused most of the commentary on custodians. It's also possible to get insurance on hot wallets or wallets that are connected to the internet, often associated with exchange wallets. But we don't really recommend holding your Bitcoin in hot wallets in the long term. You can expect that the cost of insurance on those hot wallets will be even higher than the custody wallets.
Thanks, Jeremy. All right, so next step, big one. For us, it was big. Investor relations strategy, public relations, communications, announcements, disclosures, SEC disclosures. You really want to think through, what do you want to communicate? Through whom do you want to communicate? What channels and how? When we announced our Bitcoin strategy, we were the first major corporation to have invested in Bitcoin. Now, there's a little bit more safety in numbers. MicroStrategy, Square, MassMutual, other crypto-specific public companies. And so the waters are a little bit warmer. But you still want to understand, especially with your existing set of investors, how do you want to communicate that to them? Because they may be looking for something different, expecting something different. So this is an important part here to get out to your analysts and investors proactively as you do this. But I think you'll get a more receptive audience and a more knowledgeable audience than you may have in the past, especially with the interest that we've seen in Bitcoin corporations in the last, I'll call it 6 months or so. And then the final big decision, and this is an important one, is how do you want to invest? You go direct and want to own and hold your own Bitcoin through a broker and through a custodian, and that's what MicroStrategy has done, or through several brokers and several custodians, or do you want to do it through a fund? There's time to market and probably ease of accounting if you work through a fund. And if you work through a broker and several custodians, then you have more control of your Bitcoin. You have more control of whether you want a buy and hold strategy or buy and sell strategy, et cetera, et cetera. So that's pretty important. And the answer could be both, right? You could have a diversified portfolio. Is it Bitcoin only or is it other cryptos, right? We chose Bitcoin only because we believe it is the superior cryptocurrency. It is the dominant one, but you may want to have others. You may want to hedge, and that may be appropriate too. So that's sort of a finance and IT planning phase, and a pretty important one. The next one is as critical, which is really your vendors and partners. And so we talked about your advisors. Now you have to go through your vendors and partners. And this is almost like a typical vendor selection or contracting process. But you don't want to run it with sort of the typical procurement organization. You really want to run it with your leadership. Deciding who your brokers are, who your custodians may be, what funds you want to work with, what banks you want to work with. Your advisors can help you, but this is a very personal decision. And in doing so, there are a lot of considerations, not just reputation of the firms, longevity of the firms. Jeremy talked about insurance considerations, but their trading platform, how easy is the technology to use? Those are just a few. Jeremy led our vendor selection process. You want to talk about some of the other key considerations?
Yeah, so there are a number of considerations as Phong's outlined, but I'll highlight just a few that I think are really essential in the process. First, you need to consider the capabilities of the service provider, and you want to make sure that they offer the services that you need, or they align with your strategy. And whatever combination of those service providers you select, you'll want to make sure that it fits your strategy. You want to determine if the service providers offer trading services and if they're a part of an exchange for kind of the ease of transacting, does the service provider also provide custody services? And are they providing kind of an institutional grade offline storage and key management product with reliable controls? Does the service provider offer a trading desk so you can contact them to execute trades on your behalf and just bringing them to you for settlement? You may want to also consider additional services such as lending, staking, other ancillary services that might be of interest to you in the future. And you should take the time to understand what each provider offers and ensure that you select one that fits your strategy. Second factor is price. Usually, there's a trading fee to transact, which means buying and selling. And in this world, it's making and taking is the lingo. But if you're paying 20 basis points per transaction, you're paying 40 basis points in total because you're going to buy and you're going to sell at some point. So in addition to the transaction fee, you're going to be paying for custody services, typically in the form of an annual fee on your assets under management. You also want to address specifics with each service provider to make sure there aren't hidden fees. And my advice would be to negotiate pretty aggressively on pricing. Institutional investors are just starting to enter this market, and there's a significant room for savings on these fees. Third consideration would be around security capabilities, right? Get to know the security protocols for each provider. Do they have multi-factor authentication when you're signing into accounts? Are they able to support multi-approver protocols for transactions so one person can't unilaterally approve everything from funding to cashing out, for example? Does the service provider have their SOC 1, Type 1, and 2 certifications so that they can demonstrate for your audit team that they have controls and for data management and that those controls are actually effective? These will be very important when you're working with your auditors to validate your internal controls. And I think the last thing that I'd mention is, insurance. I talked a little bit about this before, and I won't dwell on it now, but you should definitely focus on that as part of your strategy.
All right, Jeremy Price giving advice on pushing your vendors hard on price. It's an important point here. If you're a major corporation who's looking to invest in Bitcoin, you're still early in the game. All of the vendors you'll hear from tomorrow want you as a customer, and going early means you're sort of trailblazing. It also means that you have the ability to find the perfect partner and ask for the right pricing. And when you find that right partner, it's really just a great relationship going forward, which we've had the good fortune of having with all the partners that we've worked with. Okay, so we've completed this planning phase. There's really a couple of things you want to do now. You want to update your project roadmap, key timelines, action zoners. As you're going to get into the execution phase, things start moving pretty quickly. And this is a good time that we found to have a board meeting, one formal board meeting, to lay out all the research that was done, to talk about, how you may want to invest in Bitcoin. You may not need formal board resolutions at this point, but you really want to have a robust, lengthy board discussion on all the work and why you're moving in this direction, why the strategy, what the execution plan looks like, and get their support to continue to move forward with really then what we'll get into next is the execution phase. And, I sort of split this into two parts. It's just there's a lot of things to happen here. But this is the fun part. You just sort of go one by one and go through each of these pieces. First, prepare your treasury policy, right? And we have a sample of what our treasury reserve policy is that we've open sourced. But what do you want to talk about here? First of all, assuming you already have some sort of a treasury policy, this could be an addition to it or amendment to it, but you want to talk about, all right, so how much can the company invest in Bitcoin? Through what means? What are the transaction procedures? What are the prohibited activities? Buy and hold after trading, hedging, what are your brokerage and custodial arrangements? You want to get that all right in a very robust treasury policy, because this is the policy by which you will start executing your strategic moves on a go-forward basis. Second is your trading policy. The difference here is each trade will be governed by this policy, right? What are your non-trading periods, right? Like to prevent potential conflicts of interest. Who can trade, right? In our cases, we have a short list of people who can move money from our bank accounts to our exchange accounts, short list of people who can move money from our exchange accounts to our custodial accounts, and back and forth. And like you do it with your bank policies, you typically have 3 or 4 people who can do it, and you need at least 2 people authorizing some of those movements. Those are the kinds of things you want to put in your trading policy. And similarly, as you identify people who are officers, directors, etc., who might already hold Bitcoin, you want to make sure that you don't have any conflicts of interest. You may want to have closed periods, just like when you're trading your own publicly traded stock. You're going to want to have closed periods for trading Bitcoin too. So having a very robust trading policy and a treasury reserve policy, once you put those things together, the execution then beyond this can be quite seamless. But thinking that through thoroughly is quite important. Of course, then you want to negotiate your brokerage and custodial agreements. Jeremy talked about the pricing, making sure you get that right. Levels of service, types of trade. Can you pick up the phone and call somebody at any hour of the day? Right, Bitcoin is extraordinarily a 24/7 network. You can trade any hour of the day. Can your broker support that? Right, and is it live? Is it through a electronic feed? How do you make pricing decisions? Those are all the types of things that you want to put in there. What are the limitations? How much can you trade per day? How much can you withdraw per day? Those are all things that you want to have in there. Who are the points of contact within your organization, within your brokerage organization? So these are things that I think are more precedented when you think about traditional securities trading. When you talk about Bitcoin trading, there are less precedents in the institutional world, and you want to make sure you get all those things right up front. And then you want to set up the accounts, your brokerage account, your custodial account, your fund accounts. And that is an important step too. It's not as simple as, well, setting up a bank account is actually quite complex for a corporation. So it's a little more simple than that. But there's a lot about, how do you transact? Jeremy, you want to go through some of those details for us?
Yeah, sure. In terms of transacting, right? I mean, it's really important that you get feedback from your experts on what to expect, right, and how things are going to be done. We couldn't have acted as quickly and with as much conviction or as efficiently as we did without our experts and our partners. You need to consider how and who will execute the process of carrying out the Bitcoin strategy, right? You need to find reliable, accessible employees that you trust that need to be part of the process. I think third, you need to focus on the segregation of duties and controls and how you're going to execute on all of your transacting and the management of the assets. And I think from a controls perspective, it's extremely important. And then, we realized early on that one thing we thought was, or that in retrospect, we think is really important is using a trading desk to execute, especially since we had limited experience executing crypto trades. I'd highly recommend that type of service for institutions contemplating acquiring Bitcoin in any significant quantity.
Awesome. And then you want to decide internally who's going to be responsible for transacting. Make sure they're fully trained on the platform. Do some test transactions. Make sure you actually know how this works so that, your first big trade, whatever it is, $1 million, $10 million, $20 million, isn't the first time, right? And it's a lot of fun, but you just want to make sure everyone knows exactly what they're getting into here. And then the last big document is the accounting memo. How are you going to account for this, right? And we'll go through this in nitty-gritty detail in about an hour and a half or so. So I won't go into that too far. You have our accounting memo or version of it out on our website. But think about it. There's 3 big documents, right, that you need to make sure are in place and well thought through. Treasury reserve policy, trading policy, and accounting memo. A lot of work here, but it'll be very satisfying, gratifying work because it really lays the groundwork for how to think about this as a corporation on a go-forward basis. Next set of items, execution phase, part 2. I talked earlier about IT and systems. Make sure you have the right defenses, changes in place. Make sure that you're ready for anything that might happen in terms of bad actors coming into the organization. You may already have some of these things in place. You just want to retest them, ramp them up, have monitoring in place too. And then you want to go obtain your insurance. Jeremy talked about this. Insurance via your custodian, insurance via your fund, cybersecurity insurance, D&O insurance. Make sure that all those are all in the right place and everyone feels good about it. and then start putting together your SEC disclosures, right? And there could be quite a few, right, depending on the materiality of the decision that you're about to make. 8Ks, 10Qs, 10Ks, etc. These are all things that you want to work through and think through, and they'll follow in large part some of the things that you've done in your accounting company too. And then your communication strategy, right? We talked about investor relations, but also employee communications. Your employees may wonder, okay, so what exactly are you doing? Why are you doing it? For those who are less well versed in Bitcoin and whose knowledge might be, circa 2008, the last questions, about sort of the more seedy side of historically cryptocurrencies, and you want to be proactive. One thing we did is some of the education documents that we made available on our website. We made that not just available for all you, but available for our employees too, right? And so getting employees well versed in what Bitcoin means and cryptocurrency means, and typically, just like with our stakeholders, employees spend a couple of hours on this and become fascinated and very interested in their life. This makes complete sense. Investor relations we talked about, and then public relations, right? What proactive communication channels do you want to use? What I love about this part of the world, when you get into cryptocurrency, into Bitcoin, the public relations channels are quite modern, right? Think Twitter, think YouTube, think Medium, and things like that, blogs. And so you don't have to rely on, print communications. You don't have to rely on your traditional PR firms who may actually not be very familiar with the space and know what to do. Here you can use ingenuity, creativity, and start to modernize the image of your company, not just in how it invests, from the treasury side, but also how you communicate out to all the different constituents. And you can really play around with this and have a lot of fun, especially on Twitter. So good things that can happen as you think through your communication strategy. And then you prepare for your big board meeting where approvals are going to be made, right? Associated committee meeting documents, resolutions, conduct the board meeting, go through investment committee, audit committee meetings, approve the treasury reserve policy or the treasury policy, approve the BTC trading policy, approve the accounting policy, usually through an audit committee, approve and agree on brokers, custodians, clear any conflicts of interest. Once you've gotten through this execution phase, this is a big one, but once those approvals are done, you're sort of off and running and ready to go and start to talk about your initial foray into Bitcoin. And that's really then you get into the post-execution phase, right? So once you've done it once, how often are you going to do it? What's the timing? What's the frequency? Making sure you have a nice treasury plan in place for subsequent Bitcoin purchases. What do you do as a communication basis going forward? And then you start to trade. And after 6 months of having done this, couldn't be more thrilled that we did. We couldn't be more thrilled to share with all of you our playbook. So with that said, any closing remarks, Jeremy? Lessons learned, ahas from your experience through this process? Other than you got to know me way too well.
I already knew you way too well enough. Okay, so yeah, I think there are a couple. So for me, first point would be, don't go it alone, right? We started our journey knowing very little. We learned quite a bit, but we learned even more with the experts that we brought in to consult with us. And I think that the knowledge we gained from each other, just not the one-way communication, but the knowledge that we gained and that we gave to our experts even, we all learned, and it was an invaluable experience for both parties, and created kind of a community and starts to feel a little bit more like a community as we went through the process. I think that, as far as adapting and adjusting to the needs and improving our policies, like we worked very well together. I think it was very important for us to get it right, to have that ecosystem. I think also we learned that, the Bitcoin investment community is pretty tech savvy, pretty modern, and it's a great fit for MicroStrategy. And in 2020, MicroStrategy rode the virtual wave, shifting, our digital marketing and sales efforts to a digital marketing and sales platform. We took advantage of online collaboration, work tools, working remote in a forum just like this. And we adopted a digital asset class as our primary treasury reserve asset. I think all of those things have helped the company tremendously improve margins, value for shareholders. And I think the investment community sees that and has responded to that. And it's not something we necessarily were sure everybody was going to respond to. We thought that they would, and we were very pleased that we did. So, my advice for other corporations would also be that this is a journey, and you need to set your course and put your plan together, but you need to be agile enough to adapt and change course throughout. It's not easy to make that initial leap, but if you put the work in, hopefully with some of the information that we're providing and examples we're sharing and the growing ecosystem here, it gets a lot easier to start and complete the journey. And I think what I'd say is that the key to it all is really just getting started.
Thank you, Jeremy, and thank you for the time. And let me build on a couple of your lessons learned first. And this builds on what Ross and Mike also said. If you believe your company is going through a digital transformation, and as I said, as I kicked off MicroStrategy World, you need to, because that will be what differentiates you against your competition. And your digital transformation has really just started with your P&L strategy and your products and your services. That's part one. Every company, every major corporation at this point in time also needs to digitally transform your balance sheet and your treasury policies. And Bitcoin is the way to do that. It is not something that comes immediately to mind for every corporation. But when you take the time to do the research, to understand the macroeconomic impacts, the digital impacts, the global impacts, etc., it is very much, you're either sort of immediately get it or you gradually get it. And as people gradually get it, a light bulb goes off and they suddenly get it. And then you dive in and it's a great thrill. It brings great value to your organization, to your employees, to your shareholders, to your stakeholders, and to your customers. And it's something that everyone should be considering and then very quickly doing. And thank you for all your time. We'll be back in a little bit at the top of the hour to talk about the legal considerations. And trust me, you may say, oh, legal considerations, this isn't going to be fun. It's thrilling, it's enthralling, and it's more you ever want to know than you'll ever want to know about Bitcoin legal considerations, but it'll be highly entertaining. Thank you, everyone.
You need better visualizations. Get Vitara Charts. Just drop the plugin into MicroStrategy. It's that easy. It's that beautiful. It's that flexible. Vitara Charts. It's that powerful. Join MicroStrategy customers from around the world who use Vitara Charts everywhere MicroStrategy can be used. Get a free trial today. Vitara Charts. Business visualized.
The perfect storm of data growing by the day and enterprises moving to the cloud is creating the need for deeper and faster insights on billions of rows. This need for massively accelerated analytics has opened a space for a platform to help MicroStrategy thrive in this new world. The Kairos BI Acceleration Platform lets you instantly analyze all your historical and granular data while using MicroStrategy dossiers, documents, and reports on any cloud. Our AI and ML-powered smart OLAP technology enables you to slice and dice, drill down, or roll up billions of rows in seconds. Consolidate all your queues for holistic reporting and eliminate user downtimes.
Hey, everyone. Thanks for tuning into the stream today. We have been watching some history, a piece of Bitcoin history, as Michael Saylor's company, MicroStrategy, hosts a conference called World Now with a Bitcoin for Corporations track. Apparently, there are thousands of CEOs and corporations attending the conference, the virtual conference, getting access to the MicroStrategy playbook. You just watched the the Bitcoin legal considerations session next is the Bitcoin finance considerations session. So thanks for being here. We are discussing the first two sessions of today on Clubhouse right now. Those were the Saylor sessions, as you can see down there in the caption. You can find us on Clubhouse, join clubhouse.com if you have an iOS device. It's still in beta, but it's growing like wildfire. So if you have an iOS device, go to joinclubhouse.com, install the app, and you can find an invite. Just ask people on Twitter. I have a few left myself. Don't flood my DMs, please, but I need your phone number in order to text you the invite. So yeah, we're hanging out there and talking about this thing. Preston Pish is in the room. Matt Odell's in the room. Got Corey Clipston, CEO of Swan. Brecky's in there. So we're having a good conversation about this stuff, and everybody's feeling bullish AF right now. So we took this opportunity, this conference, and talking about Bitcoin as a corporate asset to launch Swan Private. Now, Swan Private is our service to serve corporations and high net worth individuals looking to buy $100,000 or more of Bitcoin in a year. And we are excited to welcome Robert Breedlove as managing director of Swan Private. Really excited to welcome Robert to the squad. He is one of my very favorite Bitcoin authors, thinkers. I like to call him a Bitcoin philosopher. So yeah, that's exciting. I'm super excited about it. You can go check out the details at swanbitcoin.com/private. If you know anybody who's running or is, like a CFO of a corporation, big or small, as long as they just want to put in $100,000 a year into Bitcoin. So that would include lots of small to medium-sized businesses as well that would like to go on a corporate Bitcoin strategy, just like Tahini's Restaurants in Canada. They went on to a Bitcoin standard soon after MicroStrategy did, and they are a chain of restaurants that are about 5, I think, now in Canada, and they're on 100% Bitcoin standard. So companies, small, medium, large, can use Swan Private, and we will guide them in the process of going on to a Bitcoin standard. Again, that's swanbitcoin.com/private. So really excited about this trend moving toward a Bitcoin standard for corporations, governments. I assume, well, I hope, I know will be next. They'll follow suit. Like Elon Musk said the other day, and he now has one word in his bio on Twitter. It's just Bitcoin, simply the Bitcoin hashtag, just like Jack Dorsey does. He said that in retrospect, it was inevitable in relation to Bitcoin. And I believe absolutely 100% that is true. Bitcoin is better money. There's something called Gresham's Law, which says that good money drives out the bad. And we've seen transitions between monies throughout history, and that this law is true empirically as we look back. And we have a better money now. We have a real money again. The dollar stopped being real money when it lost its store of value property, when we went off the gold standard in 1970. And since then, we've seen inflection points in lots of economic indicators and social health indicators. For instance, you can go to WTFhappened in1971.com. Great website, WTF is what the fuck happened in 1971.com. And you'll see graph after graph after graph, chart after chart that shows this inflection point right around the early 1970s when we went off the gold standard. The top chart on there shows productivity continuing to increase at the same pace that it had for 50 years before 1971, in lockstep with wages, with real wages. And then in 1971, wages basically flatline. Productivity continues to go up and to the right at the same pace. What does that mean? Well, Robert Breedlove, our new managing director of Swan Private, has called it time theft. And I think it's a perfect way to describe it. So we are becoming more productive with our time. We're producing more in the time that we have. All of us are as a country and really as a world, as a globe. So we're producing more with our time, but we're not being compensated for it. And that is time theft. And where does that theft go? Who does it benefit? It benefits the rich. That's why we've seen an increase in wealth inequality. So if you go to that website, you'll see charts as well that show that we have increased wealth inequality since 1970s drastically. They're like late 1920s levels again, and actually even more severe than that. So it's a difficult situation we're in, but we have some hope. Bitcoin provides us some hope. Money is the base layer of civilization. It's the foundation of civilization. It's been a technology that we've had around for a long time. And here we go. Back to the Bitcoin Summit. I will turn it back on here. This is the Bitcoin finance considerations. This is the last session of the day. You can come join us on Clubhouse. We'll be going all night.
And then you saw a little bit of what a general corporate playbook looks like for integrating Bitcoin into a treasury reserve strategy. In this session, we're going to share with you the main legal lessons that we at MicroStrategy learned in our Bitcoin initiative, with the goal of demystifying some of the most important legal aspects, and then showing how, from a legal perspective, all these things come together to support a successful corporate Bitcoin project. Now, I know that when some people hear the word legal, they think that things are going to get technical or perhaps very specialized and hard to understand. Please don't change the channel. We have made the presentation and discussion format geared for non-lawyers. And I think that's actually very important. As Fong and Jeremy were touching on in their last presentation, we found that implementing a Bitcoin corporate strategy really does require a lot of good collaboration among different individuals and teams, especially the finance, legal, internal controls teams, the board of directors, our senior most executives, external advisors, and other constituents in the organization. And so we want to be sure to promote cross-functional learning that we think is useful for pretty much any corporate Bitcoin project. Speaking of collaboration and advisors, joining me in the session are three other panelists. All of us worked very closely together on the legal matters for MicroStrategy's Bitcoin initiative. They're going to introduce themselves, starting with my colleague, Una Green. Una?
Thanks, Ming. Happy to be here. I'm Assistant General Counsel at MicroStrategy, and I work very closely with Ming on corporate governance and securities matters. I helped Ming with our Bitcoin initiative pretty much from the beginning and worked on the legal aspects of the initiative in one way or another.
Next up is Dax Hansen. We didn't work actually with Dax before we embarked on our Bitcoin initiative, but I'm sure glad we found him since he helped us navigate a lot of the regulatory considerations. Dax?
Thanks, Ming. My name is Dax Hansen. I'm a partner with Perkins Coie, where I chair the firm's blockchain and fintech practices. And today I'll be focused on the unique regulatory and technology aspects of Bitcoin that are relevant to a Bitcoin investment strategy.
Okay, our last panelist is Tom Ward. He's our longstanding outside corporate and securities counsel who helped us transition as a publicly traded company from our pre-Bitcoin era, so to speak, to our post-Bitcoin era. Tom?
Thanks, Ming. I'm Tom Ward. I'm a partner in the corporate practice group here at WilmerHale, and I'll be focusing today on corporate governance, securities regulation, disclosure, and some policy and procedures aspects.
Great.
Go
ahead, Tom.
We'll find that all of these aspects work together. What I've talked about, what Dax talked about, Una and Ming, but I don't think people will find it ultimately to be overwhelming.
Terrific. So what exactly are the legal lessons we're going to be talking about? Here are the 5 that we think may be the most useful to other corporations that are starting to consider adding Bitcoin into their treasury. You can read them here, and we'll go through each one of them.
Before going any further, though, I did want to make one more plug for the documents that we've open sourced. Fong mentioned them in the last session. We've published about 7 documents, and we'll be discussing some of them here. You don't have to refer to them on the website, but we did want to make sure to reference them again so people can know to go look for them afterwards. All right, so with that, let's go ahead and start with lesson number 1. Actually, let me show a picture of the documents we have up on our website. There they are. We will move to lesson number 1. What you do with Bitcoin will drive the regulatory issues. As it turns out, what you do with Bitcoin precisely can make a huge difference in the regulations that apply. Dax, you're a seasoned lawyer when it comes to the regulatory landscape that applies to cryptocurrencies and especially Bitcoin. Can you give people an idea of the main areas of regulation? I think it's a good starting point, other than the securities laws, which we'll talk to Tom about in a minute or so.
Absolutely. So there are 3 core regulatory areas that a company needs to consider with the Bitcoin strategy. And the first are the federal and state money services business laws, such as those that are administered by FinCEN. Money services business laws prevent money laundering and terrorist financing, and they impose reporting and licensing and examination requirements on non-bank financial institutions. A company that's merely investing in Bitcoin usually isn't going to trip up against these money services business laws directly unless that company expands the scope of their activities to include things like wallet or exchange services. The second area that's relevant on the regulatory side are the federal sanctions laws, such as those that are enforced by OFAC. And sanctions laws really protect us by requiring that all U.S. persons avoid dealing with the enemy, such as criminals and terrorists on certain government lists or by dealing with certain embargoed countries. Sanctions laws are relevant to someone who's investing in Bitcoin because Bitcoin is an international digital currency network, and it will be important for a company to vet its counterparties against those government lists. Third, commodities laws, such as those that are administered by the CFTC, impose requirements and restrictions related to trading and other aspects of contracts that derive their value from an underlying asset, such as futures contracts and swap contracts that might be tied, for instance, to things like barrels of oil. And a company that's investing in Bitcoin that may wish to hedge the volatility of the Bitcoin price may want to work with derivatives to hedge that risk, and if so, would need to take a close look at commodities laws.
Thanks, Dax. So it seems clear that many laws can apply to Bitcoin activities. So, for example, if you're a Bitcoin exchange or you provide Bitcoin custodial services, there are special laws that you need to comply with or licenses that you need to get at the federal or state level. But let's focus here on the upshot for our purposes. Can you explain why a strategy of merely buying and holding Bitcoin as a treasury reserve asset doesn't need to drag in a lot of those laws as a practical matter?
Sure. Yeah, I think there's really 2 reasons. The first is that investment in Bitcoin is not the type of activity that these laws were intended to regulate. Conversely, a company that's investing in Bitcoin is actually the type of entity that these laws were designed to protect, for instance, in its dealings with custodians and brokers.
Great. So I think what that means is the laws are still there in the background. And in fact, a lot of those laws need to be complied with by the vendors, right, that one uses. If you're the corporation that's just buying and holding Bitcoin, your vendors, in many cases, are going to need to pay attention to those laws. But let's pause there on those particular laws. And then let's talk a little bit about securities, and we'll come back and wrap things up in a moment. Tom, you're a securities lawyer, and I think it's a really important question or issue that we need to get on the table right at the beginning, which is Bitcoin isn't considered a security. And it's a really, really important significant fact, because it means a lot of the SEC regulations that would apply if Bitcoin were a security just aren't going to apply. And this is particularly important for publicly traded companies, because obviously publicly traded companies have to pay a lot of attention to the securities laws. Can you explain why Bitcoin isn't a security?
Sure, Ming. Let me go through it a little. Everyone knows that stocks, bonds, options, and the like are securities. And by contrast, cash like dollars or gold aren't. The current SEC test basically says it's a security created when there's investment of money in a common enterprise with an expectation of profit derived from the efforts of others. So using this test, actually, the SEC's taken the view that some digital coins are in fact securities, mostly because they represent passive investments that require a promoter to build out a network and make the enterprise connected to that coin successful. Bitcoin's a little bit different, though. The SEC's view is that that network is currently sufficiently decentralized. Purchasers no longer expect any person or group to be carrying on managerial or entrepreneurial functions. And so that doesn't really fit within the test for security. And so if you have no central third party whose efforts are determining the enterprise and the network on which it functions operationally, there really isn't a reason to apply the disclosure regime of federal securities laws to Bitcoin. And so senior SEC officials have said that they're of the view that under the SEC's current test, Bitcoin does not constitute a security. And in that way, Bitcoin in some ways is quite different from other things that you see in the initial coin market.
So Bitcoin's not a security. What does it mean about, whether a company like MicroStrategy that has acquired and holds Bitcoin becomes an investment company?
Yeah, man, glad to clarify this. I know you get this question quite a bit from folks. Hey, we hold Bitcoin. Why isn't there an investment company active? And the answer to that is that the statutory definition of an investment company depends on a company either holding a specific percentage of securities or holding itself out as an entity that primarily invests, reinvests, or trades in securities. So the fact that Bitcoin isn't a security for SEC purposes basically means it's outside the purview of the Investment Company Act. And so that's why MicroStrategy isn't an investment company.
Now, similarly, we get the question often whether MicroStrategy has become an ETF because we hold as much Bitcoin as we do. Can you explain also why we're not an ETF? This is an important point to underscore as well.
Sure. ETF, as everyone knows, stands for Exchange Traded Fund. And exchange traded funds are registered investment companies that invest in securities and then their interests in turn trade on markets. MicroStrategy is not an ETF in part because we're simply just not a registered investment company, basically because of that issue of Bitcoin not being a security. In addition, ETFs are structured sort of completely differently from MicroStrategy Corporation. ETFs have arrangements with financial institutions to keep their market price and net asset values close to each other by having the institution engage in arbitrage by either redeeming shares directly to the ETF in exchange for the underlying assets or by purchasing shares in the ETF. MicroStrategy has none of those arrangements. So no shareholder is entitled to exchange MicroStrategy shares for any of its underlying assets. So in short, no, MicroStrategy is simply not an ETF.
Okay, so to recap, Bitcoin is not a security for securities law purposes. MicroStrategy hasn't become an investment company because of the Bitcoin that we've acquired and hold. We're also not an ETF. Let's just change the hypo a little bit. What if a company like MicroStrategy wanted to invest indirectly in Bitcoin? So not directly invest and hold it, but buy, say, shares in a Bitcoin fund. Does that change the analysis at all?
So I mean, absolutely it does. As Dax was saying earlier, how you exactly deal with Bitcoin really affects the regulatory regime involved. And that applies on the security side as well. If you invest indirectly in Bitcoin through a fund, for example, now you're within that SEC definition of a security because you don't hold the Bitcoin, you own fund shares. And those fund shares are going to be deriving their value in part from the actions of the fund manager. So in that case, the company, those would be considered securities, and the company would then have to start looking at those investment company act thresholds as to what amount of securities the company can hold before it becomes an investment company. Now, there may be ways to structure fund investments to avoid tripping those thresholds, but those get very complicated and maybe beyond the scope of the presentation.
Okay, so we just did a very, very quick tour of a number of different areas of the law that can apply to a company's interaction with Bitcoin. But there's a key takeaway here, and I want to mention this as we wrap up this first lesson. And that is that for an operating company like MicroStrategy, merely buying and holding Bitcoin directly for treasury purposes means many regulations like the money services business laws, commodity regulations, assuming you're not hedging or engaging in Bitcoin derivatives, and the Investment Company Act, et cetera, they just generally aren't going to apply directly to a corporation like MicroStrategy. And that really was an important point for us because it meant that investing in Bitcoin turned out not to be as daunting from a regulatory standpoint as we thought it might be. Now, if your business wants to do something more or different with Bitcoin, like what a PayPal or a Square or Coinbase does, then other regulatory considerations would definitely come into play. But for just buying and holding Bitcoin directly for treasury purposes, the regulatory demands are actually much more limited. Still things to consider, but very manageable. All right, so let's wrap up the first lesson and let's head over to lesson number 2. Yuna, do you want to kick us off on this one?
Sure. So we picked corporate governance as one of the key points we're covering today because it's very important for publicly traded companies like MicroStrategy. It's about making sure that our board of directors and our executive officers are satisfying their fiduciary duties to the business. And it really shapes views on things such as what sort of due diligence is advisable, how policies and procedures should work, and internal controls. And in many ways, corporate governance serves as the backdrop to all of the other points that we're discussing in this session. And I really think this is all the more important when it comes to Bitcoin, because just as Tom and Dax were explaining, Bitcoin is not a conventional asset like stocks or bonds. And as evidence of that, when we checked which investments the company was authorized to make, we weren't surprised at all to find that Bitcoin and other digital assets were not specifically authorized. So we knew from the get-go that we need to get approval from our board for MicroStrategy to invest in Bitcoin, especially at any significant levels.
Now, I guess because of that, you might remember one of the first things that we did to support corporate governance was to have our executive team, as well as our board, spend a lot of time at the beginning just getting educated about Bitcoin. And Fong and Jeremy made reference to that in their presentation. And then also understanding why it could be an asset that we want to invest in and what considerations are implicated. Here we get to one of the documents that we posted publicly. If you go to our website, you'll see a document called Key Considerations for Corporate Investment in Bitcoin. This document lists out many of the important areas of learning that we studied up on as we consider our Bitcoin initiative. And I would encourage everybody to go look at that document since we're not going to have time to consider all of those things here in this session. Dax and Tom, as experts in your field, we were very fortunate to have you help us get up to speed. Can you highlight for everyone some of the more important considerations for boards to get familiar with as they consider investing in Bitcoin to support corporate governance?
Absolutely. So from a technology perspective, Bitcoin really is novel. It's not backed by anyone. It's an asset that's tracked on an open source ledger that everyone can see and have access to, but no one controls. Transactions can't be reversed. By design, there's only 21 million Bitcoin that can ever exist, and they'll be introduced at a certain fixed supply. There's 24/7 trading that you heard about earlier in these sessions, which is different from traditional markets. And Bitcoins really are not coins at all in a tangible sense. They are ledger entries that are managed through public and private keys. And so if you lose your key, you lose your Bitcoin. So that brings us to the second point, which is custodial arrangements, that given the high stakes of safeguarding and preserving your assets, it's important to make smart decisions about how you will custody the Bitcoin and which custodians you'll use, and also the different internal policies for engaging with those custodians.
So, the market for Bitcoin is pretty unique. I mean, it's 24/7. It's very different from stocks and bonds. I think it's worth talking a little bit more about the market factors, which will then play into some of our SEC disclosures, which we'll talk about later. Tom, can you comment on that?
Yeah, and look, market factors are going to be very important in making the decision to invest in Bitcoin, and the board and management is going to have to look at those. In particular, two are quite unique to Bitcoin. One, unsurprising to the audience, is volatility is a fact of life and very significant in the Bitcoin market. Volatility will have a significant impact on accounting and then disclosure as a result, which we'll discuss a little bit later in the presentation. Secondly, liquidity is often an issue that is raised in the Bitcoin market. Although with the increased size of the market, liquidity is significantly improved recently. So what liquidity would look like in a panic situation remains something that unknown. MicroStrategy, for example, took the view that it was going to hold the cash necessary for day-to-day operations of its business in traditional cash investments to reduce any requirement to have to find immediate liquidity in the Bitcoin market, even as the Bitcoin market liquidity improves.
I want to follow up specifically on fiduciary duties since they make up the legal framework for corporate governance. Tom, can you please explain briefly what fiduciary duties are relevant and how companies can go about satisfying them, especially in the context of investing in Bitcoin?
Sure. There are really two key fiduciary duties that boards need to be aware of in determining to invest in Bitcoin. The first one is a duty of care and the need to get informed. Duty of care requires that boards become informed after deliberative decision making that's based on all the material information that's reasonably available to them. So this is going to be thoughtful, and as a practical matter, the board members are going to have to do some homework here on Bitcoin. It's an emerging technology and an emerging market. This is not time for investors for directors to be passive and sit as a bump on the line. They need to look closely and clearly at all the benefits and risks and understand potential losses, accounting issues, regulatory uncertainty, and the like. And a key part of that is going to be that board members are entitled to rely on outside experts. And they, when MicroStrategy was looking at this, we brought in a number of outside experts on Bitcoin to talk to the board about this, right?
Yeah, that's right. I mean, obviously we had yourself and Dax, but we also consulted other experts. And I think getting information directly from experts was very helpful to us in our due diligence. What about the other fiduciary?
Yeah, the second fiduciary duty is duty of loyalty and potential conflicts of interest. And, the duty of loyalty requires that fiduciaries act or decide not to act in a disinterested manner and an independent basis in good faith with an honest belief that the actions in the best interest of the company. That raises the issue of potential conflicts. You'll want to be mindful of any potential conflict of interest you normally have with any company activity. Someone had an interest in a potential broker or custodian groups. But the more difficult, maybe Bitcoin-specific issue relates to trading of Bitcoin by individuals. It creates the problems of inside information, front running, and the like, and requires a specific Bitcoin trading policy, which we'll discuss further here when we talk about some of the policies and procedures that MicroStrategy incorporated.
Before we leave the topic of boards, Dax, I'm sure you've advised a lot of boards in the cryptocurrency and the Bitcoin space. Do you have any thoughts you want to add to how to get boards up to speed and how it all comes together for a board decision?
I'll just add one thought, which is that this is a very complex area with lots of moving parts and pieces. And this is an area where I think lawyers can be very helpful. The in-house lawyers and outside advisors to just parse through the various interrelated legal considerations and to help the board and the business make good decisions and to organize the process and the documentation well.
So I think the key takeaway from this lesson is that corporate governance is really the backdrop for pretty much everything that one does to help execute on a Bitcoin strategy. And so you really have to think about governance from the beginning, especially if you're a publicly traded company. It'll also help you get through your board and your governance processes a lot more smoothly if you think about it from the beginning. That wraps up lesson number 2, and we'll move on to lesson number 3. Policies and procedures are your friends. I think you wanted to kick that one off as well.
Yep. So given the regulatory and corporate governance considerations we just talked about, it's not surprising that our third key legal area to discuss is policies and procedures. So policies and procedures effectively act as the guardrails for the company to invest in Bitcoin. Dax, you helped us a lot in formulating policies and procedures for investment in Bitcoin. Since most other companies out there thinking about investing in Bitcoin are probably in a position similar to what MicroStrategy was in, as in little to no prior experience with Bitcoin. Based on your experience with us, what's your advice to them about how to think about policies and procedures in this context?
Well, from a big picture perspective, I'd say it's important, first of all, just to define clearly the scope of activities and really the investment thesis of a company, to know what you want to do. And that's going to inform really the focus of the policies and procedures that you put in place. Recognize that this is a rapidly evolving area where the legal landscape changes on us frequently. So we need to be nimble and dynamic, like bamboo blowing in the wind. And then to implement guardrails that are tailored to the company's specific objectives on the investment side, calibrated to their organizational and governance structure, their regulatory profile, and those of their selected partners like the custodians and brokers, and also the company's risk appetite on different issues. And just recognize that no two companies are going to be the same, and there will be opportunities to iterate. And then lastly, I guess I would say it's important to look around for best practices and find good advisors. And I think that this conference and the presentations posted will go a long way in that regard.
And I know internal controls is another important area of focus for flagging, especially for publicly traded companies. Tom, can you comment on this?
Yeah, so policies and procedures are going to be important. They're going to have to be written down because auditors are going to audit a company's internal controls under Sarbanes-Oxley Section 404. So they're going to look closely at your control environment and how you are purchasing and holding any Bitcoin investments that you make.
Well, with that background on policies and procedures generally and their importance, let's talk about a concrete policy, and that's our Treasury Reserve Policy that we developed for our investment in Bitcoin. It's also one of the documents that we shared publicly for people to view. I guess both Dax and Tom, when we developed our policy, you helped us identify areas that we should consider including in the Treasury Reserve Policy. Can you touch on some of the sort of more important considerations for that Treasury Reserve Policy? They're maybe more Bitcoin specific.
Sure. Well, from my perspective, one of the first items to consider are your people issues. Who's going to be making the decisions and the strategies? Who will be implementing those strategies? Who might be providing some sort of oversight and controls for those decisions? And how will all your people work together to both meet sort of the need for speed, but also to keep good controls in place?
Right. What about policies and procedures around how much money a corporation can and should put into, say, Bitcoin versus keeping in cash? I think that was an important issue that we discussed a lot internally. Tom, can you comment on that?
Yeah, no, that's right, Ming. MicroStrategy is taking the view that it wants to hold cash for day-to-day needs of the business, and that allows it to mitigate those liquidity risks we talked about earlier in Bitcoin. So the board looked at different scenarios and determined what was going to be needed for working capital, as well as how cash reserve might be deployed for ongoing business requirements. This is an example, as Dax said earlier, no companies are the same. It's going to vary from company to company, and you need to take into account what your expected cash flows from your business operations are, any seasonality needs, for example, any short-term business plans, there's an acquisition in the works, et cetera. So those are the kind of things we want to look at in terms of identifying these thresholds for working capital.
You know, the other interesting area of internal discussion when it came to the Treasury Reserve policy was the focus on service providers. And we're going to be talking more about your service providers that are needed for a Bitcoin Treasury Reserve strategy. But Dax, this was new to us, kind of sort of embedding it into the Treasury Reserve policy. Can you talk a little about why that's important?
Sure. I mean, a custodian and also brokers are going to just be critical to your success or failure. And so it's important in the policy to pre-vet them and to understand what those terms of engagement might be. So, develop effective processes in advance for vetting and contracting with, engaging, and for ongoing monitoring of your custodians and brokers.
Keeping with prohibited activities, Dax, that was another area that we had focused on. Some specific importance here relating to Bitcoin. Can you just comment very briefly on that?
Sure. So you don't want to step into a bear trap unintentionally, or inadvertently. And so it's important to think through in advance the scope of activities you'll be engaging with your investment thesis, so that you don't inadvertently become, for instance, an exchanger under the money services businesses laws. It's also important to make sure you have safeguards in place for protecting the safety of your people and for protecting your assets from some security and other breaches.
Great. We mentioned that we've published our Treasury Reserve policy, and we do hope it's helpful. But I think as somebody mentioned, there's not going to be a one-size-fits-all Treasury Reserve policy. Different companies can and often will have different control processes and risk management objectives and techniques. But hopefully you can take a look at our Treasury Reserve policy for some of the basic areas that we think are most important, at least in our case. Let's move on to one more concrete policy, which was referenced earlier, which is our Bitcoin trading policy. This is another one of the policies that's a little more legal oriented that we thought would be helpful to talk about. Tom, this was an interesting policy for us to work through because there were some parallels to another policy we have, which a lot of publicly traded companies have, which is the insider trading policy related to company stock. And yet it had a few different wrinkles to it. Can you explain why that's the case?
Yeah, an Bitcoin trading policy is needed really because there's two things out there that really impact trading. One is fiduciary duties that we talked about earlier, where an insider might take a trading opportunity without offering it to the company first, and where a conflict of interest might arise where an insider engages in front running and manipulation to the detriment of the company. The second item is commodities laws, which broadly parallel Rule 10b-5 under the Securities Act and prohibit manipulative and deceptive devices and trading on the basis of material non-public information, and trading on the basis of information that's been obtained through fraud or deception.
Right. So as a result of those things, we put provisions into our Bitcoin trading policy that sound pretty familiar in the context of insider trading policies, like non-trading periods to help prevent potential conflicts of interest between individual personal transactions and company transactions in Bitcoin. We've got provisions that talk about no trading on material non-public information relating to our company's Bitcoin activities. And then you've got prohibitions around front-running company transactions and other things that might constitute market manipulation, et cetera. I think the key takeaway as we wrap up lesson number 3 is that policies and procedures can be really helpful in keeping the corporation in the lane that the corporation wants to be in and avoiding unwanted problems down the road. Now, we just focused on 2 of the more legal-oriented policies. There are other policies that are important that pertain to things like accounting, internal controls, and the like, which our finance colleagues will be talking about in the next session. So you can look forward to that. That wraps up lesson number 3, and let's move to lesson number 4. Carefully review and select vendors. This lesson is a great example of the cross-functional collaboration that we were talking about earlier, and why it's so important. In some other contexts, the topic of vendors might be somewhat bland and not sort of rise to the level of importance that it has here. But it's actually really essential in the context of Bitcoin, because we need it for good risk management, given some of the characteristics of Bitcoin. And the vendors that you're likely to use aren't going to be the same vendors that you've worked with before. And the issues are going to be somewhat different from the ones you've probably needed to deal with in investing in other assets like stocks or bonds. Now, the two most important vendors for a buy and hold strategy that MicroStrategy has are your custodians and your brokers, right? You need services to help you acquire your Bitcoin, and then you've got to have a service that's going to help you hold it if you're not going to hold it yourself. One of the great things about this summit is that you'll hear from some of the leading providers of these services in day 2 of this track, so please stay tuned. Now, as an initial matter, when it comes to vendors, we need to figure out what products and services you're going to want from your vendors. For example, if you not only want to buy Bitcoin, but you want to hedge it or enter into derivatives relating to it, then that's a service that one vendor might offer, but another one might not. So you do have to be very careful and not make assumptions about the scope of activities that these different vendors can have. Speaking of the scope of the activities, it reminds me of the first topic, which was the regulatory considerations, Dax. I know you ran through, with us, many of the things to consider in assessing custodians and brokers. Can you touch on why it's important to consider the regulatory profile of the vendors that you're considering?
Absolutely. I mean, the simple answer is because the regulatory profile of your brokers and custodians can have a dramatic impact on the safety of your investment. Consider the type of legal entity that your custodian, for instance, is. Are they a New York limited purpose trust company? Are they a federal OCC bank? What's the relative sophistication of the prudential regulators? What are the capital requirements and bonding requirements that those legal regimes impose on the licensees? Those will net out certain protections for the customers of those entities. It's also important to understand what sort of custody model your vendor uses. Are they a qualified custodian under the securities laws? Are they holding this as fiduciary? Is it a bailment? What are the bankruptcy protections and pass-through insurance protections that are afforded to you? Understanding the domestic protection versus international protections all have an impact. And there really is a fair amount of variation in the regulatory profiles of the custodian brokers out there.
Yeah, with that as background, there's a lot to consider. So let's now move to contractual considerations for engaging custodians and brokers. Since MicroStrategy, designated Bitcoin as our primary treasury reserve asset, making sure we had an appropriate custodian or custodians was always high on our list, and we knew that we needed brokers as well to help us acquire, our Bitcoin. To help others in negotiating things like a custodial arrangement or a broker arrangement. We've made public a document that we've used to help identify the issues that we wanted to focus on, at least in the context of our custodian negotiations. And it's a document called the Contractual Considerations for Digital Asset Custodians, and it is published. We encourage everybody to look there. Dax, can you touch on some of the more significant issues that companies would likely want to address in striking the contractual arrangements with custodians and brokers? I know there's a lot to cover, but maybe you can highlight a few.
Sure, absolutely. So I guess looking at your list, we hit briefly already on items 1 and 2 in terms of the regulatory profile of your partner. Item 3 is really critical for understanding how you're going to buy and sell the Bitcoin, and to understand and build into the contract the fact that timing really is of the essence, that the prices can fluctuate dramatically, and that can be good and bad for the company. Items 5 and 6 really are sort of the heart and soul of a custodial program, which is really just aimed at keeping your Bitcoin safe, keeping it safeguarded, and make sure the security protocols think through things like hot wallets and cold wallets. And items 9 and 10 are really there to think through in advance in the contract what to do when things go wrong. What sort of insurance limits are available to you? Are you an additional insured? And what are the respective limitations of liability or indemnity obligations or disclaimers in the contract?
Well, clearly there's a lot to consider when thinking about vendors like custodians and brokers. And I think we also got that from the presentation by Fong and Jeremy, and there's not enough time to go through more of it. But I think the takeaway from this lesson is that the learning process that a corporation needs to go through with Bitcoin, understanding Bitcoin, extends very much to the vendors that would help you implement your Bitcoin corporate strategy. So you need to keep that in mind in your planning process. So that wraps up lesson number 4, and we're in the home stretch now to lesson number 5. Una, do you want to kick us off again for think through public disclosure?
Sure. And this is one of the lessons we're focusing on today because public disclosure is very important to publicly traded companies. We start with the basic principle that publicly traded companies have obligations to disclose material information in a timely way because investors need to consider that information to make informed decisions about buying or selling a company's stock. So to help illustrate some of the disclosure issues we had to think through, let's look at 2 examples. Our initial investment of $250 million in Bitcoin, and then the creation of our Treasury Reserve policy. Tom, could you comment a bit more about why these developments are considered material and therefore need to be disclosed?
Sure, Una. To provide just a little bit of background, MicroStrategy held initially about $500 million of cash and cash equivalents. And when the board determined the company was going to do 2 things with that amount of cash, they were first going to do a Dutch auction self-tender offer for up to $250 million of common stock, and then authorize management to invest up to $250 million in Bitcoin. Both of those were material events, and the Bitcoin authorization, because it was so new, was material to the decision of stockholders whether or not to participate in the tender offer. So as a result, the company announced both of those actions simultaneously via press releases and Form 8-K filings. At that point, the company is cash flow positive, and the question was now raised, well, what's going to happen with cash generated in excess of the business needs? So the board subsequently determined to adopt that Treasury Reserve policy we've been talking about. And so the new policy provides that Bitcoin was going to be the company's primary Treasury Reserve asset going forward. And as a result, additional cash is going to be invested in Bitcoin. So again, this is a material change from prior practice, and the company again made the disclosure on Form 8-K relating to the adoption of that policy.
People have probably noticed that MicroStrategy sometimes, when we put out press releases or 8Ks announcing additional purchases of Bitcoin, and in some of those cases, those are voluntary disclosures by us because we've already disclosed our Treasury Reserve policy, for example. But given that Bitcoin is such a new asset class for corporations to invest in, we do think that it can be helpful for the public to know more about our Bitcoin investing, than we might legally need to provide. And so we do sometimes provide voluntary disclosures. Tom, we've just talked about public disclosure around investing in Bitcoin sort of generally, but there's a host of other public disclosure implications that come with investing in Bitcoin. Can you start to touch on those? I think this is where there's a lot of intersection between what we lawyers do and what our finance colleagues do. I think it is important to start touching on it, and then our finance colleagues will build on some of this in the next slide.
Yeah, so I'll let the finance folks get into it more precisely what Bitcoin GAAP accounting is. But in short, it's very strange and creates a lot of interesting disclosure considerations. In short, Bitcoin's an intangible asset, treated as an intangible asset, and As an intangible asset, you account for initially at cost, and then in future periods, you look at whether there's been any impairment. And if there's been an impairment, then you have to write the asset down on your balance sheet prior to any sale. You don't write it up. The sales gain is only recognized when a sale is actually accomplished. So as a result, each quarterly reporting period effectively looks at the lowest price that Bitcoin has ever traded at since its purchase and requires a write down. So what's important about this is people need to understand it's not mark to market, and it's not an impairment charge determined by the price at the end of the quarter, but instead it's marked to the lowest possible price and a corresponding impairment charge at any time during the quarter. So accountants like this approach because it's conservatism, which pervades GAAP accounting, but it will detach the carrying value of Bitcoin on the balance sheet from reality in terms of what the actual market value in the trading markets is.
So, with that accounting treatment, Tom, I think it also means that public companies have to then sort of build that into how they describe their business and how they expect it to perform in the future. Can you comment on that?
Yeah, that's right. As we said earlier, volatility is part of the game in dealing with Bitcoin. So there's going to be volatility in your reported earnings because of these impairment charges. And that's going to lead to the issue of people want to really understand what's going on in the business outside of these sort of odd impairment charges. So it's going to lead to a bunch of non-GAAP presentation issues. Non-GAAP presentation to basically be able to understand the underlying business and avoid the distortion by impairment charges is a matter of significant concern to the SEC. So it's important that any non-GAAP figures be reported in accordance with Reg G and Item 10 of SK, and also they'll have to be clearly explained and reconciled to the most appropriate GAAP measure.
Now, no discussion around SEC filings is probably complete without some mention of the risk factors. And so, Tom, can you touch briefly on that?
Yeah, look, Bitcoin by its nature contains a number of significant risks, and risks beyond what investors may normally be accustomed to in thinking about investments held by the companies in treasury. So the risks need to be disclosed in the SEC filing so investors understand the risks, and they would be tailored to your particular business. But they're probably going to cover things like the regulatory risks we talked about, related controls, volatility, and the lack of any supervised market in Bitcoin, the impact of that volatility on your own stock price, the risk of theft and loss that Dax played on earlier, potentially lack of diversification, and the potential liquidity items that we talked about earlier.
Great. Well, that's going to wrap up lesson number 5, which is our last lesson. And I think we're coming up close to the end of our time slot here. Why don't we conclude by just having each of our presenters provide some concluding thoughts? Why don't we start with Dax?
Sure. I guess what I'll say first of all is that Bitcoin creates strategic opportunities. So be strategic here. And I think it's not only appropriate for corporations to have blockchain strategies, but very important for them to consider their very specific Bitcoin strategy as well.
Tom, do you want to go next?
Yeah, look, I think we've talked about, there are a lot of moving parts here, but each of them on their own is managed. And the key here is coordination and teamwork among the board and senior management, the legal, financial, and accounting teams, and your outside advisors. It's critical to do to make sure that works so you can develop and execute a Bitcoin strategy that's going to make sense for your organization.
You want to go next?
Sure. And to echo some of Tom's thoughts, I think it's extremely important for companies to find the right external advisors with the necessary Bitcoin expertise. I think our Bitcoin journey would have been very different if we didn't have guidance from our seasoned advisors like Tom and Dax. And I also think having good collaboration among internal teams is key for us. So I would advise other companies to make that a focus.
Sort of building on Yuna's final thoughts, I would just add that, I think we're the first publicly traded company to kind of do what we've done. And there definitely was a lack of good organized information out there about how to think about Bitcoin in the corporate context, the issues you have to address if you want to have the corporation invest in Bitcoin. And so we're really, really happy to have had the opportunity to make this presentation and also to open source a number of the documents that we developed as part of our journey. And I hope we've helped to start filling that vacuum somewhat through this presentation and those documents. And hopefully we're making it easier for others to pursue a strategy like ours. So with that, thanks everybody for your attention. Hopefully you found it useful, and we'll sign off now. Thanks.
Boom. There you go. Let me turn this off here. All right. That was the first day of MicroStrategy's conference, World Now conference, with the Bitcoin track, the Bitcoin for Corporations track. We heard Michael Saylor run two sessions this morning that were super bullish. The early session with Ross Gerber was incredible. You can rewind to the beginning of this video and catch the Michael Saylor and Ross Gerber session. And then Saylor held court by himself after that. So yeah, we'll leave this video here. We had a request from the chat to stream the Clubhouse conversation after this. Unfortunately, there's some presumed privacy on Clubhouse, and unless we declare in the title that we're streaming it live, it's not best practice to do so. So we're going to pass on that this time. Sorry about that, but we do stream Clubhouse sessions sometimes here to this channel. So like, subscribe to this channel. We have also Bitcoin TV streaming live 24/7 on this channel. So subscribe. Make sure that you'll check. Make sure you check out Bitcoin TV. I know a lot of people in the chat are hang out there, and a really cool place to chill, watch some Bitcoin, throw it up on your TV. We are overdue for adding some new content there. I think there's about 60 hours looping right now, but our creative director Brecky is on the case. We've just had a lot to do over the past few weeks, including launching Swan Private, and we did that today because of Saylor's conference, Bitcoin for Corporations. SwanBitcoin.com/private is a service for high net worth individuals and corporations to move their life, their treasuries, and their savings to a Bitcoin standard. So you can check that out. We brought on a famous Bitcoiner, one of my favorite Bitcoin authors and speakers, Robert Breedlove, is now on the Swan Squad as managing director of Swan Private. So that's extremely exciting. Thank you guys so much for joining today to watch this piece of Bitcoin history. We will be back tomorrow with some more Michael Saylor and another day of the Bitcoin track, Bitcoin for Corporations track on the MicroStrategy conference. And if you are on iOS, you can jump into Clubhouse. We've got, let's see, Brandon Quittem, Matt Odell, Ben Prentice, among some other Bitcoiners in there. Preston Pish was in there a little bit ago, Alex Gladstein. So if you're on Clubhouse, jump in. Our club is called Cafe Bitcoin. And if you're on iOS, you can install it now and go to Telegram. Let's see, I think it's, let me check it real quick. It is the Bitcoin Clubhouse Companion Chats. And let me get the link for that. It is, here, I'll just paste it into the chat. And you can see if you can find some invites there. Copy link. Here we go. Great. There you go. Okay, so that's it for today. We'll be back on tomorrow. Thanks a lot for joining. Buy some Bitcoin. SwanBitcoin.com.
Hi.
And my son wants to make a YouTube appearance.
Hi.
All right, we're out.